Okay, okay. We got a lot of big plays, and NSAV is something that is literally cheap right now, and it's not going to be cheap for too long because you already got the Wall Street Journal talking about Net Savings Link being a $22 a share price target. I'm going to share my screen so we can be able to get into it very early. Net Savings Link stock, because this situation has it where this is going to be second behind Coinbase when it comes to being publicly traded on the stock market. So the NASDAQ up listing is definitely there. This is a up ticket type of stock. This stock has literally blew up since I told everybody 1,000% in the past month, and I'm gonna share my screen, and also we can all get a good understanding of what position that you need to be able to put in your portfolio when it comes to at least pricing correctly, because it's literally 8 cents now. Told you guys when it was like 0.004. Respect to you. Respect and salute to you as well. Everybody that's coming in, it's an open panel. But let me share my screen so we can get to Net Savings Link. So right now, this is definitely the ultimate buy. It dropped 32%. This is a perfect entry because when I told you about it, it had a big ass run up from 65%. And the last video that I showed you guys, people got into it around this area. People that sold off in 15 cents, they made money. But this is literally for the whole month. And minus the 32% day, that's where I get the 1,000% gainage when it comes to this. Now, Net Savings Link on a lot of news sources got a price target at $22 from the Wall Street Journal. Pretty much good news. All relatively good news. So everything is pretty much all geared up. Hold on, let me do something real quick. Okay. So InSav and SBC Investor Relations unveiled dynamic blockchain strategy for the upcoming year. If only I can be able to get this thing to work fully. Ugh. I swear I hate StreamYard. StreamYard is the only time when my links don't be running very quickly, but let me give you guys the source. Refresh my page. I think I need to get OBS. Ugh. I'm about to kill that page. But like I was mentioning, NSAV is something that I've been talking about on this channel for a long time. That is the source from Yahoo Finance. That is my source from Yahoo Finance, and it's an open panel. It's an open panel. Thank you for everybody that's coming in. So let me share my screen and let's talk about LCLP. That's another big runner. NINCC. LC. LP. So LCLP had a pretty much a dip buy entry right now. This is literally all dip buy entries in order to have a safe bet in getting in properly. So let me share my screen on this one, and that's Life Clips Inc. Life Clips Inc. So in the past month, that's pretty much the chart. So from July 9th to all the way up to the 15th, went up, consolidated downward, went up. People that are scalp traders, they know how to make money off of this. But still, this is for me a 10-cent hold. This is literally a 5x play for me. But TXTM, up 8% today. This is literally like a 10-cent hold, so that'll be a 20, 30x. So everybody should realize buy the dip. Because in the past 5 days, downward trend. But by the dip opportunities, you can be able to get good entries at a good price. So that's the monthly chart. What else? LGBS. Matter of fact, DRNG. This is a drone delivery company. DRNG. This is a longer term hold for me. So this is Drone Garter, and this is actually a buy the dip opportunity for myself and for anybody that's trying to get it before it hits to 10 cents, because this is 10, 15 cents easily off of the merger. They have mergers and acquisitions coming in. So that's the percentage from July 28th to August 2nd. 1 month literally was from zeros. Hit 1 cent, consolidated, took a dip, but today it's up. Today, well, no, the past 5 days it's been up by the dip entry. So when tomorrow hits, you can get a good play on a dip opportunity. So this is a buy the dip opportunity. My apologies. So this is a drone delivery company. So LGBS, buy the dip opportunity. Merger and acquisitions. That's the 5-day trend, up 21%. And that is the 1 month trend. So I told you guys about this like weeks ago. Even when I did took hiatuses, I still managed to make sure that you guys knew what exactly I meant about these. So SPQS. So this is a sports betting stock. So this is a buy the dip opportunity before the sports season comes back. August 5th is preseason for the NFL. Then we got Robinhood. Has a excellent trend, up 16% today. Told you guys about that the last live stream. If you're going to get on Robinhood, get on it before it becomes a $150 stock, because all the retail buyers is coming in. So that's Robinhood. So that's ticker HOOD. Hey, James. Respect to you, James. If anybody wants to come up on the panel, this is an open panel. If anybody needs my email, creditbuilder475@gmail.com. That's creditbuilder475@gmail.com. Feel free to come in as well. It's an open panel. The link is open for anybody who wants to come in. I'm about to transition into some more plays. Please like the video and please share the video as well. Definitely is free. Definitely is free. And also you can get your 2 free stock lists as well. So free stock list and secret lenders list. Helps you when it comes to all the underwriting, when it comes to a lot of credit companies. So if anybody wants to come up, feel free to come up. I'm about to talk about, actually, Robinhood can be $150 by the end of the year off of the volume of people buying into Robinhood, and also the profits looking healthy. Profits are looking very healthy. So we are going to talk about, let me get my notepad real quick. But if anybody wants to come up, come up. I want somebody to come up to open up the dialogue, so it's not going to be as dry for the people that's coming into the replay. But let me search something real quick. NIHK, it's electric vehicle merger. So it's NIHK. NIHK, but Robinhood is something that you guys need to get involved in when it has a good entry buy. So NIHK. Once again, a buy the dip opportunity. Buy the dip opportunity. Past 5 days since I mentioned this to you guys, 16%. Past month, an 87%. And people should always buy the dip, because people that wait for it to go down, then bought the dip at that lower end, you would have made 40% off of waiting for the dip. Like if it was a regular stock being traded on the NASDAQ, people would have shorted, made money off of selling high and buying low, than just to double up on buying low and selling off high to get double the returns. But that's if this stock was able to be shorted. But this is pretty much, this is a 50-cent situation for me. This is a 50-cent play for me. So it 5-10x off of merger acquisition news. But really, the company needs to focus strongly on building up its assets and buying other businesses to increase and expand its cash flows. That's literally only how that can be able to get worked out in a suitable manner. And Fern, F-E-R-N. So that's Fern. F-E-R-N. Once again, Fernhill Corp. Buy the dip opportunity. Always buy the dip to get you a strong entry when it comes to a stock that has good news coming up with a catalyst, plus mergers, acquisitions. So this is a buy the dip opportunity. Still buy the dip opportunity. As you can see, past month shot up. Went down, still buy the dip opportunity. Went to 2 cents, but still people should always look for good entries. So this company, Merger. I have a weed company that I needed for you guys to pay attention as well. So let me get my list so we could be able to get you guys well informed when it comes to that. So let me research this real quick. Give me one moment. Hold on. I knew I'd written that down somewhere because it has a strong balance sheet. I know I put it down somewhere. I put it down somewhere. Damn, fuck it. PBYA. So I'm going to give you a better situation with some updated catalysts. And if it's in a red day, you always buy the dip because it got more government contracts and filings on the way. PBYA. And PBYA is a 10-cent hold for me. So this is something that you always should look on when it comes to situations like these. Buy the dip opportunity. In the past 5 days, that's the trend. As you can see, people made their money. You buy the dip. Like right now, always buy the dip. The bigger news comes in September when it comes to this company. As you can see, that huge drop off. Because I had this on people's list in June. So people that pretty much cashed out just should focus on buying the opportunities of the dip. But really, merger plays and filings, because the more companies start getting them 8K filings from the SEC, the more better for you. QEDN. Once again, another buy the dip opportunity for QEDN. Once again, this is a 10-cent hold for me. 10-cent hold for me, so I love these dip opportunities. I love all these dip opportunities. Last time I told you about that, up 30%. You see the month trend line. Plus CYBL is something I've been telling you guys about. CYBL. Told you guys about this when it was 0.004. Once again, buy the dip opportunity. This is a dollar hold for me, so this is a long-term play for me specifically. And I told you guys about AFTM, the one that blew up 200% that one day. It's still up 40% today. I told you guys about that on the last live stream. After Master Inc. It was up 200% that one day. Past 5 days. Hold on. Okay. That's 5 days. That's the percentage. the past 5 days. And the funny part about it is you always buy the dip in those areas. Because it was at a penny. Told you guys about it 2 weeks ago. So people managed to get it at the dip opportunity. So I did not put you guys at risk at all when it came to the entry buy. That's why you always look for a good dip. Always look for the dips. Because even when it did dip, it just went to 0.0809. Now it's at 0.004. Up 38% today. Last time I told you, 200% gain. Respect to everybody that's coming in. Man, this is open panel, man. Y'all need to be able to come up. I know a lot of y'all is checking in with me while y'all transition to work. I'm doing this stream before I got to do any type of consultation calls with clients or talk to my employees when it comes to my e-commerce store. But let's be able to get a conversation going when it comes to this. Because a lot of y'all did pay attention onto my plays. So this is an open panel, open business panel. Feel free to join in. Feel free to join in. Click on the link. Click on the link. Click on the link. But let me figure out what's on my list specifically, because there's another situation that you guys need to be paying attention. Like Robinhood, we've had you pay attention on that. Matter of fact, Robinhood is a better squeeze play than AMC right now. Told you guys about Clove when it came to short squeezes. What else? Clorox. Stocks that are making the biggest moves are Clorox, American Airlines. I've been told you guys about that. So that's AAL. What app would you suggest in investing in? Charles Schwab, E-Trade. It was TD Ameritrade, but TD Ameritrade pissed me and several millions of people off. But CB, if you want to come up on the panel, feel free to come up on the panel. I definitely won't bite. I can answer your questions directly in a very timeable manner where it's not a delay. Because I'm pretty much going to share my screen and we're going to look at a couple more plays that you guys need to pay attention on. But to answer your question, again, Charles Schwab, E-Trade, Interactive Brokers, with Robinhood stock is actually a better play because it was $34. Now it's hitting the $50 mark territory. So it will be ranging around that area, probably at the end of the year, $60, $70. At its maximum, $100, based off of people knowing what Robinhood is, media exposure, plus hedge funds want to be able to ride the wave when it comes to the retail investor surge. So a lot of retail investors was made in 2020, so they're trying to capitalize and benefit from it. So I don't like Robinhood as something as an app to invest in certain securities, but it's definitely a stock that you should not just ignore. So E-Trade, Interactive Brokers, Charles Schwab. Now, when it comes to a lot of the stocks, there is been delays of people trying to get their buy entries in. That's because of a lot of regulations being changed when it comes to people entering and exiting the market. NSAV is something that I tell everybody all the time on this channel when it comes to a crypto play that people can take advantage, fully take advantage of. So, okay, so I got a healthcare situation for you. So that's FTEG. FTEG. Had my eye on Robinhood for a few days, been investing in Clover Health, but it hasn't been making any money. Well, is a short squeeze play. With short squeeze play, people with AMC didn't make a lot of money for a lot of people that was talking about how it has a short interest where a corporations is shorting. Now, when it comes to Clover Health, I would say if you haven't made any money, focus on transitioning when it comes to that. But short squeeze plays is something that it takes time to blow up due to the fact that the companies that are shorting the stock that make it go down, like I keep telling people all the time, shorting is the strategy of selling high and buying low. It's the reverse. So when it comes to Clover Health, focus on more Delta variant plays. So the healthcare 3X bull, I keep telling everybody about it. When it comes to putting money up and riding a wave, when it comes to healthcare is getting public and private funding. And healthcare right now is actually doing better than the biotech 3X leverage. So when it comes to Clover Health, if you want to be able to exit, you could be able to exit. But I tell people all the time, short. When it comes to shorting stocks, be careful. When it comes to buying short squeezes, always have your stop loss on. But Mr. Kenyatta, if you want to come up on the panel, man, feel free to come up on the panel. I can answer your questions there. You can be able to clear up a lot of questions that you have, any type of strategies that you need aligned. We can be able to answer that right now. I'd rather people click on the link to be able to enter in than anything, because people should just at least be very interactive when it comes to at least the program. But Clover Health, you can be able to exit out of that situation. But Robinhood is something that you can take the monies from Clover Health. I don't know if you put in $100 or $50, you can put that into Robinhood in order to ride that wave. Because Robinhood is not going to be under $40 for too long, people. Robinhood is not going to be for under $40 for too long, but definitely would expect people should understand that trading strategy of short squeezes is something where you wait on corporations and hedge funds to be able to say, hold on, I got to cover my short. Well, I got to cover my position. So that means if they short 1 million stocks, they got to buy 1 million stocks. And that's just one company. Just imagine 50 other companies that are paying attention on the same play of shorting a stock and get literally launched when it comes to a short squeeze. So Clover Health is something like, how can I put it? Clover Health is something more of you have to either have a good risk tolerance. That's what I tell everybody all the time when it comes to short squeezes, gamma squeeze, or any type of terminology of short squeezing or a high short interest, meaning that the company's being shorted downward. Oh, okay, you're at work at the moment. Okay, no problem, Mr. Kenyatta. But I just want to be able to fully give you full transparency on that question specifically. But when it comes to everything based off of a short squeeze, people should realize that you take advantage of companies that has to hold their ground when it comes to not losing money. Because short squeezes, when AMC short squeeze from $5 to $25, hedge funds was losing their mind. And when it went up higher, hedge funds had to buy more into it, making the stock go higher. So that's what the term short squeeze is in general. So hedge funds and corporations got to understand, you got to cover your loss more better. And you got to be aware of people that are literally on chat rooms or people that have a lot of money to play, not necessarily kingmaker, but throw a monkey wrench on their plan where they lose billions in a day. But this is an open panel for all the people that's coming in. Please like the video. Please like the video. And also, if anybody wants to be able to come up with any questions specifically for me, be able to feel free to come up. So I have 2 more situations I need for you guys to pay attention. AMC actually is a situation where you definitely got to sit down long and hard for it. But Robinhood, has the hot hand. Robinhood is not going to be. Matter of fact, let me share my screen again. So you guys that's coming in can be able to see. So let me share my screen. And we're going to type in Ticketer Hood. Net savings link is really the play that people should be keeping an eye on, because that has a price target of $25 and net savings link is only 8 cents. Told you guys about it when it was about 0.004. So the people that do actively pay attention, they got into that very good at a sweet price target. But people should look at the old videos so you can see with the net savings link. I told people about it without no type of strong recommendation. I tell people all the time, do your research, but this is from the starting bell. Start charging up where the price targets start moving very swiftly. That's the 5-day. Because I don't see this being $34 again. Because look at the volume, $102 million volume in one day. The volume has curved where it's ranging around 15 to 20 million, $15 to $20 million a day that's being transacted. But $8 price target, it's not going to be. Matter of fact, let's look at AMC while we on the conversation of AMC. Ugh. AMC is 33. I didn't really heavily promote AMC. I tell people all the time, if you're going to invest in AMC, just make sure that you know what a stop loss is, or just understand the process of a stop loss so you can avoid unlimited losses. That is AMC at 33. So the market took a steep crash, then recovered. So it took a steep crash from the open. So literally 30 minutes. In 30 minutes, it crashed 140 points. Rose back up. 50 minutes later, consolidated sideways. Then rose back up. Consolidated sideways as we speak into 1236. So the Dow Jones is definitely having a very up and down day. Extremely up and down day. I tell people all the time to have your bull 3x and your bear position ready. Always look to capitalize off of a China bear situation. So that's ticker YANG. Robinhood ain't gonna, like I tell you, man, Robinhood is not going to be that cheap for too long, man. Not with $100 million in starting volume and $15 to $20 million being transacted daily. But, so let's go with ticker Yang. YANG to profit off of a China market crash. So why do we do Yang? To benefit off of a China market crash. And yen is the China bull. So as we see, the China bear is up. So this is 3x leverage, y'all. So this is multiplying people's gains off of an index. And it's daily. So if you made money today when it comes to the China bear position, you sell your position. You get back in the next day. Either you do a market turnover where if you think that the China bear is going to be bearish, then that means you go to ticketer YINN. So that's the China bull, but the China bull is $12 and it's down. Wow. The China bear is up. So when this is up, the yen is down. So that's the correlation of inverses. So we're going to go to a healthcare ticker that I meant to tell you guys, FTEG. FTEG. For the Earth Corp. Triple zeros with me. If it goes 10 cents, it's a big payday for everybody. Matter of fact, we can all go to Cancun and vacationing if it hits 5 cents, let alone 10. This is a triple zero play. High risk, high reward, of course, but in the past 5 days since I told you about it, it's up 16%. This is the past month. Pretty much vertically shot up. That's FTEG. Hey. Respect everybody that's coming in, but like I said, that's triple zeros. It's triple zeros, man. So let me share my screen again. Like literally, wish I had somebody that had a calculator to do the numbers directly, but for me, this is a 5, because even if it goes to 0.003, that's 10x. If it goes to 3 cents, that's 100x. Now, the best bet when it comes to a big monster play has to be Net Savings Link, because this is literally 8 cents, and you got the Wall Street Journal saying that this can be a $22 a share stock because it's second behind Coinbase. So this is a buy the dip opportunity. But since I told you guys about this, it has a monster ass run, up 80% 1 month, ranging around 700 to 1,000% since I told you guys about this. $22 that they have it as their price target, $22. Even if at the end of the year it goes up to $2, $88 that you put in can be ranging around either $400 to $500 in return on investment. So I don't know, man. Situated like this, you got the Wall Street Journal hyping this up. You see the news. INSAV and SB Investor Relations unveiled dynamic blockchain strategy for the upcoming year. INSAV announces it's on schedule for August 9th to launch its cryptocurrency exchange. These incomes will go up as soon as they can start making money off of people coming in. But this is December 20th. December 2020. So this is literally before they even had everything lined up, scheduled. But this is all of the market plays. Bank of America up. SP 500 up. Verizon down. Twitter is down by a little bit. Matter of fact, I know I'm forgetting something for y'all. But Net Savings Link, man, please remember NSAV. NSAV, please. E-Trade, Charles Schwab, NSAV, because Coinbase is like expensive as fuck. Coinbase is like $230. If people say, well, if I got $230, I'd rather spend $230 with Net Savings Link, and Net Savings Link is only 8 cents compared to $250. So people should always look at the competitors. So we're going to the real estate market after I'm done talking about NAIL. So that's NAIL. That's the Home Builders and Supplies. So people complain about properties is going so sky high. I can't buy a house. This profits off of it. So this is literally up big today. This is 3x leverage. So since the last time I told you, up 10%, really up 13% if you understand momentum trading and study the volumes of these things. But this is 1 month, 6 month trend, year to date, up 100%, 1 year. And like I tell you guys, pre-pandemic levels, it beat it. At its lowest point, it was at $7. Now it's at $86. At its highest, it was at $150 a share. This is 3x leverage. So if people want to ride a wave, the nail wave is something good. But you should always focus on the bear. And the bear is, I think, Claw, CLAW. So it didn't show up. But I think it's Claw or Craw. So AAL, so that's American Airlines. I told you guys about this last year to buy the dip. So with this Delta variant stuff, as long as people still buy tickets, people still want to be able to travel, it shouldn't get hit as bad. But if it's lockdowns from Biden administration, then that's where this thing can go very down very quickly. So 1 month, 6 month, year to date, 1 year. So from 1 year up 70%. So September to now. 5 year. That's pretty much that dip right there. So that's American Airline. MGM is also a play as well. Focus on MGM as something that can be able to at least get you a good, strong positioning, because MGM is starting to get involved when it comes to sports gambling. Sports gambling stocks benefits off of the NFL season. So anybody that wants to come up, anybody that has a question, feel free to come up. I'm going to transition to either real estate or something in that parameter. People should always think more the aspect of how to benefit off of other stuff. Oh, I'm forgetting TMV, Treasury bonds. That's economy stuff. So that's TMV. So I'm going to share my screen. TMV. So when it comes to that, that is how you pretty much have a good hedge when it comes to certain situations that comes to the economy. So that's the bear treasury. That's the 10-year. So TMV is actually the, how can I put it? TMV is something that you use to be able to hedge correctly. People should always focus on betting on both sides because the direction is pretty much 3x leverage. So you don't hold these things no more than a day unless it's a huge rally play where you can be able to get a substantial amount of gains, where if you put aside $50 every month, with it having a good bull run, you can be able to get good leverage on your money. Good leverage on your money based off of the fact of either the market is going down 5% a day, meaning that you're going to be up 16%, 20% a day in certain times, or if the market is up, you can still be able to hedge your bets and still have your gains being compound and leverage 3x. So what you do is you always look at the economic outlook. You always look at what Janet Yellen is saying. She's the Treasury Secretary, Treasury Department. So she is the person that has all of what the administration plans to do when it comes to either lockdowns, tax increases, or inflation, or their plan for inflation. It really don't seem like a plan. To be honest, people are investing in the stock market to beat inflation. People realize investing in the stock market is actually better to beat inflation. People are investing in crypto. As a matter of fact, let's look at Bitcoin right now. Let's look at everybody's sweet baby in Bitcoin. I tell people all the time, Ethereum is the way, but I don't know. So let's look at this treasury crypto. Okay, this is bit damn. So it was close to 40, dropped. So it tunked, shoot up, consolidated downward, then rose back up. I don't know, Bitcoin be running 24/7, so this is like a non-stop slope. Past 5 days, past month, went from 35 to 42. Past 6 months, it had pretty much a huge sell-off. So the time when Elon was telling everybody to buy Doge, that was around this time. It pumped up to 60,000, consolidated sideways, crashed steeply, rose back up, then had a deep crash. Then the inevitable, when everybody found out that Elon Musk pretty much sold all his Bitcoin, which people could have found out when it was up here, because he sold it about a month early before it crashed. So that's why people should focus on people's 13F form, to be able to see that Elon sold it when it was on top of here. People didn't start finding out about it when it was around the early, middle May. Then it crashed. Then it took another crash. Took about 3 crashes downward. So that is the dip. People should realize that if you would study a 13F form, 13F, matter of fact, let me type it for y'all, because Elon sold it a month ago, and I told you that Elon sold his stuff off of the aspect of the 13F form. This is every hedge fund corporation. So when they buy something very big, they have to form 13F forms that they got to fill out. That's something that's by law. That's not something I create. It's not something I made up. That's the SEC.gov. So I typed it in the chat for y'all guys to study up on. So it's not too late to invest in Bitcoin. I was thinking Dogecoin would be a great come up. Net Savings Link is a better situation. I'm telling you, man, I wish y'all would think more Net Savings Link instead of Doge. Doge got all the popularity, but it hasn't went up much, man. Let's look at Doge right now. This is just for people that keep on saying Doge, but Net Savings Link versus Doge, that really should be my next video, because Net Savings Link is a whole exchange. You hear me? A whole crypto exchange versus a coin that's just hyped up by Elon, and Elon's very indecisive, man. Elon don't know if you want to take Bitcoin as currency to buy for people to buy Teslas, or he don't want it. He want to create his own crypto coin in order to have people to be able to buy Teslas. And so Elon is very, very flip floppy. So you should go by off of what his CTO says. Because I looked at the B Word conference, and I think that was last month. Then I looked at the call that he has. Has anyone got any insight yet? I did. Now, people in the channel has pretty much been hearing about that for the past 3 weeks. So if they would have got their E-Trade, if anybody got their Charles Schwab, their Interactive Brokers, and try to figure out scrapping and clawing how to be able to get in, that they should be up, or more or less in a good entry. Because like I said, 8 cents. The Wall Street Journal has it at $22 a share. Like, come on. Even if it doesn't hit $22, if it hits $3, people still made every $8 into 300. That's still a win. Every $8 into 300. So that means 80 can be 3,000. 800 can be 30,000. So people should do fixed dollar cost averaging to work your way up on a situation. If you guys believe in Doge, say, okay, I'm gonna set aside $30 on Doge, $30 on NSAV, $30 on Cardano, because Cardano is something that really should be at $7 already. And I told you guys about the Cardano coin at 15 cents. A lot of people in the space pretty much found out about Cardano off the aspect of me preaching it to them every 5 seconds. But Doge, D-O. G. Oh man, I done messed up. Hold on. Doge. Matter of fact, let's look at Ethereum. Ethereum is something that can be the Bitcoin killer easily. We're going to go at Doge after we look at the main ones, because Litecoin was at what, $50 at one point? If I'm not mistaken. This is today. Crypto market is having a red day today. 5 days, big gain. 1 month, trending upward green, trending. I actually had a sell-off when as low as, how low did it went? 2,100, then went as low as 19. No, went as low as 1776. So really it's up 40% from July 20th to August 3rd. This thing be running quick. Ethereum be running quick. Ethereum be running quick. Yo, don't just fall on don't just fall on the aspect of just one aspect. Like I did TD Ameritrade for a long time, but I don't know, man. Charles Schwab, E-Trade, and Interactive Brokers, those are the ones that I'm focusing on now. So please don't let this opportunity get blow past because TD Ameritrade ain't working. Go to Charles Schwab, go to Interactive Brokers. Don't just let do not become a TD Ameritrade victim, because I was to the point where I was so frustrated where I didn't know what the hell was going on. But it's an open panel about Doge at its peak. Whoops. See, I tell you, don't fall for the media hype. I know people are conditioned to not pay attention to people when they tell you to get involved in this because they don't see the potential. But boy, when it blows up big, I do not want to have it where people say, damn, I should have got involved in this. With me, I always make sure I have $60 to set aside to put in Charles Schwab. $60. If I'm going to enter in, no matter if I have small money, I mean, if I just have this walking around money and I want to be able to put some aside to be able to make it work for me, $60. That'd be safe. $60 to be able to cover any fees necessary. But this is an open panel, man. People need to come up on the panel. If I was talking about something else or anything different, people would have been come up on the panel. You guys do show support because I have yet to have a dislike on this channel. Well, at least a dislike in this channel in a minute. I haven't had a dislike in like 4 or 5 months on this channel. So I definitely appreciate the support, but we need to have people come up on the panel, man. We need to have people be engaged when it comes to this. So healthcare stocks would be anything that's Delta variant related, Delta variant vaccines, PPE, and Zoom. Another thing, if lockdowns do come back, Zoom is a play. So you be able to do M1 Finance to be able to buy fractional shares. Now, M1 Finance is good for fractional share buys. So you could be able to still make some money off of the company buying fractional shares. So that's still a play. That is still a play. I know I'm forgetting something. So give me one moment. I know I'm forgetting something when it comes to information. WCWV. New York, turn on your camera. New York, turn on your camera. Oh well. I just wanted them to turn on the camera so I can see if it's a troll or not. If anybody wants to come up on the panel, feel free to come up. I just peeled, okay. Vax Art earlier this morning. Okay, so that's ticker VXRT. VXRT, is that the name of the ticker? Vax Art, that's VXRT. Okay, so it's an open panel, y'all. Open panel. Now, I don't know who New York was, but I just want somebody just to turn on their camera. They can turn off their camera as soon as they can verify it's not a troll. Because, man, trolls be derailing a conversation, boy. But WCVC. That's what we're going to look at. WCVC. WCVC. West Coast Ventures Group Corp. So that's West Coast Ventures Corp. Merger acquisition play. Had a huge run up. Nasty looking chart. But in the past 5 days, trending. Past 1 month, vertically up. Literally went from flat line to literally going up. Now, this company has a healthy balance sheet. Now, this company actually does have a healthy balance sheet. I told you guys about Marathon. That's the digital blockchain. So that's Mara, M-A-R-A. But this company specifically, West Coast Ventures, got a strong balance sheet. This is literally like a 2-cent hold, because if it goes 2 cents, that's 20x on my money. So I 20 times the money on just having it as 2 cents. So this company right here needs to focusing on making mergers. But Pink Current status is on its way. So Pink Current status will make it blow up even higher. This company blew up because of it having healthy balance sheet. But that's West Coast Ventures. That's WCVC. It's WCVC. So that when it goes Pink Current, it'll make people money, because all these stocks goes up based off of Pink Current, merger, acquisition plays, partnerships, grants. ASTA. That's another play that I'm going to tell you guys about. ASTA. ASTA. Now this motherfucker is up 33%. Now this did very big. But you always buy the dip. Always buy a good dip entry, man. You never necessarily get caught up when it comes to a big run up like this. Now you research the news, you research on why it went up to see if there's any more additional news. But this took a dip, then rose back up about 20 more percent, and it's up 31 as we speak, 33 at its tippity top height. Past 5 days since I told you about this, up 72%. That 11-hour live stream, we was pretty much analyzing this company. So right now for me, if it could go up to 5 cents, that's like 5x. If you could go up to 10 cents, that's like 11x. Merger acquisition plays, ASTA. That's the 6-month trend, but the 1-month trend is very strong. You always buy the dip on this. So if it goes to 0.06, if you could buy it at the 6 instead of buying at 81. But this is the trend. But that is the trend of it. I got about 100. I got about like 100 more plays on this. I need to get you guys informed, because Pink Current deadline is September 28th. Charles Schwab, E-Trade, Interactive Brokers. So I'm going to invite everybody to come up on the panel. Now this is an open panel. Feel free to come up, ask any questions, ask away. Ask away, ask away, ask away. So there is the link. Hop on, ask any questions, ask away, because WCVC is expecting pink current. As soon as that thing is pink current, we can all pretty much be able to say that it got strong price targets and more people are going to buy it because it's a transparent company that is pink current, because pink current shows transparency. So what else do I got for you guys? What else do I got for you guys? What else? What else? Let me scan to my screen. Let me do this real quick. Okay, ZAAG. Okay, ZAAG. ZAAG. This is a buy the dip opportunity for me. Share my screen. That's ZAAG. Just something for you guys to look at. Not necessarily recommend. It's always a buy the dip with me. Never buy it at extreme tops. Just to sell at extreme lows. That's doing it all ass backwards. Okay, ZAAG. Hold on. That's the trend, 5 day, 1 month, 6 month. I love buying this dip right here because it has no place but to go up. That's why I said this is not a recommend to nobody. This one specifically, this is not a recommend. This is just for me to pretty much show you on a lot of plays. I buy the extreme dip looking for reversals. A stock reversal where it can go extremely down just to go back up off of it having volume. That one was not a recommend specifically. That's just something more or less of a buy the dip, ultimate dip opportunity for me. For you guys, you always research day trading tips. You research the volume. You look for wedge setups. You look for wedge setups when it comes to day trading. Options, bear put spreads, like if the market is an overall bear market, like today, the market is up, but not by a lot. It wouldn't take a lot for the market to just go crashing down, especially if it has bad economic news or Delta variant news, cases, numbers. That doesn't necessarily help. So that's why a bear spread, a bear put spread, research that term, bear put spread. When it comes to a bear market, now that 3x leverage ETFs that I keep telling you guys about. Now we're gonna go on CURE. Now, if you want to day trade, you can day trade off of those, off of the fact that it's 3x leverage. It's 3 times the strength of the market. So that's CURE. Healthcare is always gonna get some money. Healthcare is always gonna get some money. So that's CURE. Because really, every time when you see 3x bull or 3x bear, they always tell you with direction, you always either hold it for one day. Me personally, I hold on to this bad boy and got some good leverage on it. 3x leverage, compounding. Some good leverage compounding in the past 6 months. So this is my real day trading strategy, to be honest. I do call options. I do bear puts, but this right here is gonna get everybody paid. Because as long as we're in this COVID era situation, this is always gonna be trending up. Even when it did take a very big steep, it took a steep because at that time period everybody sold off. But it went from 28 to that, from March 20th to now. So people that got their 3x leverage and they got their compound on, they made money. That's a 1 month trend. So even with 1 month, if you're holding this, you still made some good leverage. You set aside $100 every month. Well, I set aside $100 every month on this. I'm going to keep on set aside more money to compound and to get some good gains. So that would be my intermediate day trading intraday type strategy. But that is literally how you can be able to compound your money, though. That is literally a situation where you can be able to compound it, have good gains and results, and you can be able to actually have a good war chest of money working for you, because that gets benefits from the Delta variant news, period. And even if there is another lockdown and all the stocks is at extreme dip, that's why you have your inverse ETFs. That's why you have your bear put spreads. That's why you have your bear 3x leverage. So you can make money of it going down. And when all the stocks are going down and are at extreme cheap, where stocks that were $52 that go to $18, you buy that 18 and you ride it all the way back up. Plus have your call options, because it always usually goes up, because bear markets, even in the worst bear market situation, hasn't been nowhere long compared to a bull run where it's literally power surging. Like the average bear market in a whole year would be 3 months, 3 to 4 months. Average bear market where pretty much the stock market is going sideways or going down. It rarely goes up. That was in 2012. That was in the summer of 2012, going into the fall. So, what else do I need to have you guys to pay attention on? Hold on. Hold on. Wow. One of my other plays blew up quite substantially. Remember in that 11-hour live stream, I told you guys about Meridian Holdings? Well, Meridian Holdings blew up 525% today. Do y'all guys want to see? Meridian. MRDH. Meridian Holdings blew up big. Let me share my screen. But Meridian Holdings blew up 615% at its highest. Now, I told you guys about this the last live stream we did. No, the 11-hour live stream. See? So whoever that had $200 onto this, they made their money into $1,200 very quickly. And see, I don't even guarantee big results like this. I just give you news when it comes to mergers and acquisitions. But this is a home run play. The funny part about it is I told people just to buy the dip. That's Meridian Holdings. Meridian. Matter of fact, let me just have that up for y'all just to be able to realize how big it blew up that quickly. And that's ticker MRDH. This is not a buy, but when I did tell you guys about it, it was just to have it on your watch list for back testing. So what happened with this, another filing. So it pretty much turned in all its filings to the OTCmarkets.com group. It has no debt. This company has literally no debt. No convertible notes needed. After a long time, up 600%. The first filings in 12 years. And there's some details, including when it comes to the CDC.gov. It lost 90% of its value from July to August just for it to have a big 600% run up. Annual reports has came out, and that's literally the main reason of this bad boy having a big run up, a Hall of Fame type run up, because this literally was dropped to like 7 cents. Matter of fact, for all the people that's in the back, literally went from 8 cents to just 1 cent, just for it to go up from 2 cents to 13 cents. So that's Meridian Holdings, MRDH. MRDH. Always wait for the dip, but that literally blew up off of the annual report. That's why I always make sure that I have calendars, I have teams screening the network, the whole internet, when it comes to all of these people, guys' social medias, when it comes to their press conferences, their data feeds. But this literally had a home run type play. Because that literally blew up 600% off of the news being dropped and also potential CDC. So the CDC, anything that's involving with them, there's potential funding on the way when it comes to that company. or the ability to work for Grant situation. So UAMM stock. Now, I told you about these in the 11-hour stream as well, but I didn't know it was gonna be a situation like this. But this is what we talked about in that 11-hour live stream, where we went literally on and on and on and on about up 60%, went from 0.25, the 5-day 80%, 1 month 101%. I told you that's not even the highest it's been. So it's still more room. It's literally still more room. So that's not even the highest it's been in the past month. That's the little trend. Always buy the dip on these plays, man. Always, always, always. And PJET is crypto blockchain technologies type stocks. So let's look at PJET. Up 11%. Priority Aviation, once again. Merger and acquisitions. So they switching their company around, and now everything is gonna pretty much be gutted. Everything's gonna be gutted. Everything will be switched around. Blockchain is their focus. That's the 5 days since the last live stream. 1 month, huge dip. When I told you guys about these huge dips, you always get hungry when it comes to these dips, but it's going to literally have a merger in 2 weeks. So pay attention to this. It's not a buy. It's not a suggestion of a buy, but it's something to pay attention on. Because really, to be honest, people should just get their accounts ready just in case if there is a buy situation or an opportunity for you to buy, you can be able to get in. So UAMM is pretty much transitioning themselves fully as a cryptocurrency exchange. So like I said, when it comes to the other company, they're getting all their stuff pretty much gutted, repositioned, rearranged. Told you guys about MRDH, blew up 600% today. Literally did astronomical numbers off of just a sheer suggestion, not even really the premise of the hurry up and buy. But when it comes to a lot of stocks that you look for, when it comes to short squeezes, is stocks that cannot be shorted anymore, where it literally has the indicator of 0 shares available to short currently for a specific stock. When it means that means they got to buy. Hence, the stock blows up very big. Hence the term short squeeze, gamma squeeze, any type of squeeze that you've heard from mainstream media pretty much tell everybody. So, what else? KYNC, ENZC, PSUD, but PSUD blew up off of limited news. So I got to research why it blew up because I don't see no merger. I don't see on PSUD because that's literally one of the biggest plays that blew up since. But let me look at. Okay, let's go to ticker MGM. So MGM, like I've been mentioning you guys about this channel all this time. This is MGM. MGM has a reverse merger coming away. MGM has a reverse merger on the way. So let me share my screen. Kenyatta. Come on, Kenyatta. Yes, it is, sir. I don't invest in only penny stocks. I invest in stocks that has mergers, government contracts. So these companies are not just garbage companies. These companies actually have a balance sheet, funding, government connections, government contracts. You know, ticker XL Fleet and CHPT. Those are the ones that I bring up all the time on my channel that aren't penny stocks, that aren't nefarious garbo companies. But penny stocks, pink current merger acquisitions, stocks that has no dilution, or a stock that has a share buyback, no matter if it's a penny stock or a regular big stock, share buybacks. So I'm gonna type that term in for you guys to research. Share buybacks. Plus, you look for pink current merger and acquisitions. Okay, but I have to just address that to anybody that's listening to the replay. That these companies have either share buybacks, either pink current on the way, or already pink current, merger and acquisitions. I didn't take it no type of way, Kenyatta, but I just had to readdress to be able to make sure that people know that these companies like CYBL that I told you guys about when it was 0.004, now it's approaching 2 cents. Well, already hit 2 cents. It's at half a penny. So I tell everybody just to be focused on those news catalysts, FDA approvals, government grants. You use benzinga.com, so I'm going to type that in there for you. Benzinga.com. Benzinga.com is where you get your due diligence. You can be able to get your due diligence at a very well organized, timely manner off the ticketer. So you can type in all my ticketers and you can see upcoming news. If for the people that do have Webull, the Webull app, they have that locked in. So always make sure that your news is literally either from Benzinga, because you can find a lot of the penny stock news, microcapdaily.com. So I'll type that in for y'all as well. Microcapstocks.com. You look at otcmarkets.com to see if a stock went pink current or if it has the yield sign. If it has the yield, then it's literally any moment it's about to go pink current, providing all the information. So pink current. Okay. So XFLS. That will be the next ticker that I'm going to show you guys. It's in green energy, biodiesel, and about to be pink current. So when I tell you guys about this, I'm not giving y'all any hype. These situations are pink current. So otcmarkets.com. And also you go get your FDA catalyst from FDA calendar catalyst, either .com or Google search it. .com or Google search it. So I gave you guys pretty much all of the necessary tools for due diligence. You look for your mergers and acquisitions. You go on Benzinga and you search up all the tickers that you either saw from me, saw from anybody that you listen to when it comes to stocks or information, or your own personal due diligence. You use benzinga.com. And no, you don't have to use the pro version. The pro version, the paid tool, is just extra. You can get the free tool, but Microcap Stocks Daily. Damn, I didn't mess that up. So it's Microcap Stocks Daily. So I'm about to retype that one. That's another good useful source. So that's Microcaps Daily Stocks.com. OTC markets to see if your stocks went pink current or have a yield sign, or they filed a 10K, 8K form. So that's all transparency. People like those. That's where people will buy into those stocks, and them stocks will be having them big runners. I keep showing you guys every time I'm on this thing. So what else? FDA calendar catalyst.com or Google search FDA catalyst calendars. That's for the biotechs. That's for the COVID. Well, that's for the vaccines. That's for any booster shots. That's for any type of actually, there's an Alzheimer drug that I either need to get you guys informed on or I mentioned on the 11-hour live stream. I'm trying to remember here, but XLFS is where I'm going to show my screen. We're going to look at it. We're going to analyze it. And people, be on the lookout for the MGM reverse merger. MGM is having a reverse merger. XLFS is the stock that we're looking at, and it's up 3% today. So that's Hydrogen Systems Inc. So this is a green energy play that benefits from anything that the aspect of infrastructure or green infrastructure, as other people would call it. Up 3%. Now, this was an entry to buy the dip. This is clearly what I say about buying the dip. That price target was at 5 cents. 7 cents, buy the dip. And you buy the dip on good news. Like, this has good news around it. You don't buy the dip on a company that's not doing anything or not have any type of news or status. So their vision is pretty much to integrate energy with hydrogen to be able to shape up this biodiesel blue hydrogen situation. So their job is to compete with oil and gas. So they're producing the B20 on Cycle Services fleet. Is a very smart move, and ticker XL. So this is a government contract stock that's already been approved for government contracts. So that's XL. So this is not a penny. XL is not a penny stock. It is a government contract. So this is for the buses. This is for the green energy buses. And right now it's at a best dip it's probably ever going to be. But this is XL Fleet Corp. Past 5 days. Past 1 month. 6 months, it was at $20 at one point. 25 maximum. So it's at 32.5. Like I said, man, reversal. Only thing it needs is a reversal where it goes running back up just like it did. It seemed like Inauguration Day. Inauguration Day was a big day for a lot of these stocks, but this is a government contracted stock. This got government approval from the administration. Let's look at the news. So this is what they do. Hybrid electric drive system for trucks. All of this green energy plays plus $6. It was at $32 a share at its height. It's a buy the dip opportunity, people. Have your stop losses at 15% downward. Well, really, it's supposed to be 15% up, 5 to 10% down. That's to help you on preserving your capital and making sure you don't have all these extreme amounts of losses. So a stop loss, always set it at the lower price of the price that you're buying in to protect you. So that is like your insurance policy that always protects you. Yes, XL Fleet will be long-term. XL Fleet would be a long-term situation. Long-term. Very long-term. Think the next video I'm going to do will be on credit repair and getting people funding with the help of my team. Me, Brian, and also Mark will be able to help situate that for people. But this is an open panel for all the people that's coming in. Open panel for people that's coming in. Feel free to join in. I want somebody to come up. I really do want somebody to come up. really do want somebody to come up. I'm probably gonna do these streams a little later, so people that are off or have a window of time to talk, they can be able to join in. Feel free to join in on this discussion. So let me reopen up the panel for all the people that's coming in. This is an invitation for you to join in. Open panel. Open panel. Click on the link. Click on the link. So creditbuilder475@gmail.com is my email for consultations. And if people just want a free stock list and a free lenders list, you could just get it. You could be able to get it, cop it for consultations and credit repair as well. So that is my email. That is my email. But this is an open panel, man. If I was talking about something else, we would have had an open house where really have 5-6 people that just come and swoop in just to talk about all the madness that's going on. But this is an open business panel. If anybody have any questions before they book a consultation, or for the people that say, well, I'm just a person that just want to be able to get my feet wet, just have some understanding of what is your strategy, what do you do, and what can you do, then we could be able to do a situation like that. I gotta ask, what do you think about Transocean? I own 97 shares at an average of $3.50 a share. I'm hoping it blows up. Hydrogen plays. Hydrogen plays is a long-term situation. So you bought at $3.50. I have a call option on a lot of these plays to go up within a year. So $3.50, you bought at a price target. If it goes $7, $8, you 3x your money. No, $7, you 2x your money. $9, you 3x, or 2.5x your money, but still focusing on the news. Focus on the news. Are they having mergers, partnerships? You do it. Matter of fact, I'm gonna have to type this strategy out, but do what they call tape ticker trading. So that means you're focusing on screening all the news on the internet, because a lot of the times it's a race of the best, who has the fastest verifiable news. So tape ticker trading. Tape ticker trading. So that means you're following that company up and down the internet to see, screen, scan, and also implement a lot of the information that you get to become first. Because you're first, then people start realizing, wait a minute, this company is connected with whoop-diddy-whoop. Then that's where it started having its blow up. Then that's when it started having its monster gains. Then that's where you're pretty much ahead of the curve. But Transocean, CHPT is a charging point. The charging stations, that's a better play in my opinion, because that can be $150 off the aspect. That's EV infrastructure. Same with the NIHK. Same thing as well. So people just need to do more due diligence off of tape ticker trading. So that means all the stock tickers that you got, you're going to be scanning, screening to your best of ability to get all that information to become first ahead. And you could do tape ticker trading methods when it comes to, like I keep mentioning y'all, mergers and acquisitions. Merger and acquisitions. I'm going to keep preaching that to y'all until y'all understand it, until it's literally where I can pretty much condition everybody to look for mergers, acquisitions, a yield sign on OTCmarkets.com. So it'll be a yellow yield sign, And that means the yield sign will be to the point where it's pink current. And when it's pink current, those were the stocks that blows up. That's the situation of all the situations on the channel that I have showed you from now in the past of them going up was based off of a merger acquisition, a grant funding from a big corporation, or we use hedgefollow.com, which I'm going to type that out for you guys as well. Hedgefollow.com to see what hedge funds got the high yield dividends. Who is the hedge funds that has high yield dividends? How much did they buy? Because you can piggyback off of their portfolio to make your portfolio strong, resilient, and also have key experts with hundreds upon hundreds of millions of dollars to be able to piggyback off of their portfolio gains as well. So you could do this with the ARK Invest. ARK Invest, Cathie Wood, she's pretty much electric vehicled out. So that's hedge follow. That's where you follow the hedge funds to look for dividends, or you look for biotech companies and you research them to figure out, well, you research the biotech company that they're invested in. So you do what they call analysis reporting. You got to do the due diligence on the company's finances. If they got any finances, did they got any government contracts, who they with? Who they with? Who they with? Who are they connected with? That's pretty much the key of tape ticket trading, tape ticketer trading. So you're pretty much following and scanning them and screening them out. But that's hedgefollow.com. And respect to Mo. Respect to Mo. Mo, salute to you. Definitely appreciate all the support that you bring. And it's an open panel for all the people that have any questions, for the people that want to book a consultation or want their credit repaired, or they need funding for their credit profile. Creditbuilder475@gmail.com. Creditbuilder475@gmail.com. Respect to Mr. Hall. Respect to you, Mr. Hall. Respect everybody that's coming in, but it's an open panel, man. I want more people to come up. I need people to ask me questions. Hell, I want people to challenge me on certain things. It's to the point where I love a good, sturdy challenge where I can be able to answer them on why these stocks goes up, or why you should be investing in this, or why you should be paying attention, or why this, why that. You know, I got a lot of people that's from the European markets that are invested in the American Stock Exchange. So now they have a, how can I say, a incentive now to pay attention of what is going on when it comes to taxes, inflation, jobs reports. Okay, so Mr. Lonzo Hall, can you turn on your camera? You can turn off your camera. I just want to verify it's you, because I got a lot of trolls in this channel, man. Because they'll copy your... Okay, my man. All right, man. But they will copy your profile and act like it's you. I bring you up, then I just get somebody that call me a whole bunch of motherfuckers and wind up being a troll. But salute to you, Mr. Hall. I watch your stuff all the time, man.
Thank you. How you doing today, man? I saw you on, and I appreciate what you're doing. Definitely, you know, from that area. What do you think of the ratio of white folks to black folks in the stock market? That's a great question. Can we both answer that?
Yeah.
Okay. Do you want me to go first, or do you want to go first?
You can go first, man. Man, I've been talking for the past 2 hours, man. You can speak. You can speak.
Okay, fair enough. So, my opinion, the ratio is still skewed. The actual statistics, I think, are like 78 to 52 or 72 to 58%, something like that. So there is still a disparity, but it's a lot greater now, and it's a lot closer now than it was, say, even 20, 30 years ago. I think what's happening is just with the advent of things like, you know, apps like Robinhood and, you know, so on, they've reduced a barrier of entry for, you know, an investor. Used to have to be an accredited investor to deal with people on you know, on quote unquote Wall Street or in financial services, and now half the time you don't even need, a licensed financial professional like myself to do a lot of these things. So I think it's closing the barrier, and excuse me. I think it is closing the barrier, and I think it's a positive. So we just have to have more people like Real Deal out here, explaining stuff and making it understandable to you, the general public.
Yeah, man, because dude, like there's so many plays out there that's literally running. Like I told people about the Wall Street Journal is saying that one of my stocks that I told people about that was like 0.004 to be $22 a share price target. So that means the Wall Street Journal, people like to listen to what the mainstream media says. Well, they got it at $22. Like I said, it's at 8 cents now. If they just get involved and it hits $4, that means that they turn $80 into $4,000 for their trade investments. So people should always look at the metrics, look at news, screen the networks. I mean, I said screen the network, screen the internet. Because I screen the internet for a lot of these plays. But Robinhood is not going to be under $50 for too long, people. It was at 35. It was literally at 34.82 July 29th.
Now, let me ask you, I may be coming up here to challenge you a bit too, because, I think of things from an RA mindset. So one thing, quick disclaimer, what I appreciate what you do, but I won't personally recommend any stocks or anything on my end just because of legal reasons. But I definitely, love this. Can you do me a favor and look at the 52-week moving average? I don't know if you've told your followers about that. Okay.
Matter of fact, can you share your screen and you can be able to do that specifically? Because you're talking about technical analysis. What Mr. Hall is talking about is technical analysis when he's talking about moving averages. So I will share your screen.
Give me 1 second. Let me pull up the same thing. I was actually just going based off of yours. I can actually do it here because I don't even have it pulled up. I usually use Yahoo Finance, believe it or not, which is pretty good. That's one of my sources, as well as Axios. I don't watch the markets heavily. I allow people who trade like yourself to deal with this stress.
That's funny.
Because I give you the money, I let you manage it, and then I come back and I put it in a secure fund. It's easier that way. I have a few Series 7 holders on my team, so we go through this often. But yeah, so market analysis, basically the 52-week moving average is just looking at the past 1 year's performance, and kind of gauging on that. I'm not going to get too in depth on it. But that's the long and short of it. And Real Deal, like I said, I love that you come up here because you make it easy enough for, the average person to understand. You know what I mean?
Yeah, and man. Finish.
So we definitely appreciate that. And we need more of you. And what I'd like to do, I don't know, are you aware of the CAAFP?
The CAAFP.
Yeah. So
I would be lying if I tell you I did. Sorry.
Okay, that's not a problem. Well, you're gonna know about it now, because my job as a financial professional is to also, kind of do the quote unquote recruiting thing and bring others into the field, right? So I'd definitely recommend that you check out the CAAFP. I'll actually type it here. Okay. And it's hosted by the American College of Financial Services. The event is August 10th and 11th. And it is actually, let me pull it up here. And I'll just actually pull up the American College. of financial services really fast. And that's the americancollege.edu. How do people say same with a smoke alarm chirping? You forget about it after a while. I done had this thing going for damn near a year. I done changed the battery and everything. Dude, I done forgot it. I don't even recognize it anymore because it just goes. I done put in work orders. The apartment complex done came and changed the unit. I don't know if it's faulty wiring or what, but it just don't stop.
Hey man, and for the people that's coming in, man, I have a lot of people that's searching in. Please like the video, and this is an open panel. We have Lonzo Hall. Lonzo Hall pretty much dropped in on us, man. So we definitely would like for more people to come in. To be honest, I pretty much appreciate it if we have one more person. I know there's somebody in the shadows that could be able to be the third wheel, but I'm researching what you just typed in to me, so I'm researching that as well. But wow, I'm glad that there is certain type of unions when it comes to African American financial professionals coming together and having meetups when it comes to collaborations and networking and stuff like that, because that's definitely needed. That is strongly needed.
Definitely,
a lot of information is either hold out based upon of they want to be the only person to have it, and pretty much just reign over people just saying, well, I'm the one that have it, you got to go through me. That type of mentality definitely isn't productive. It's very counterproductive, to be honest. But still, for all the people that's coming in, it's an open panel. Please like the video. But finish, Mr. Hall. Finish, Mr. Hall. Didn't mean to cut you off.
Not a problem. Well, now I'm conscious of the doggone chirping, so I'm gonna take this in another room.
Chirping ain't that loud. They must be listening to you very steeply.
No. Everywhere I go, people hear it. I hear it all the time. My mother complains about it as well. Oh boy, my boss is calling me. Give me 1 second here. I'll call him back momentarily. That's gonna be fun. He's gonna be like, "I called you. Why didn't you answer? I was online, boss."
It's funny.
But what was I saying here? So yeah, with the CAFP, the beauty there is it's also hosted by the American College of Financial Services. Now, I don't want to make this, a black thing, because finances, that's why I always say, like the average American. But when we look at, things like the CAFP and the American College of Financial Services, the CEO is an African American man. And he stated at the last CAFP last year that only 5% of the financial services industry that are licensed financial professionals are Black. And that's part of the problem that leads to part of the racial wealth gap, because as a society or as a people, we tend to not trust quote unquote financial professionals because there's so many out there who claim to be, who aren't quote unquote licensed, even though, again, like I said, a lot of these things have made licensed financial professionals like myself almost obsolete. With something like Robinhood, with with apps like Stash. Now, obviously they don't make me completely obsolete, which is why I am able to come out and say something with that confidence. But it's true. And unfortunately for African Americans, we've been locked out from these industries for so long. So I think, it's important to mention that when we're looking at things like BLM.
Yeah, man. When you have, well, I was never for that organization, but when
I'm not either. Don't. But I like the premise behind it.
Yeah, but when it comes to scenarios like that, it's just of people just being more informed, man. Because economics, that's something that I dominated in high school easily. We're at 105% on my economics class, and I have my credit repair business registered, so I'm fully registered when it comes to that. Stocks is just something that I just do on the side. A lot of people was telling me about stocks like when the pandemic started because they realized that a lot of stocks was at ultimate discounts, and people knew that it was going to about to rise back up, but still, everybody should just focus on how to be able to gear themselves up. All right, no problem, all aboard. You can come up on the panel wherever you feel like it. But like I said, people should just understand how does the money system works. Capturing transactions, leveraging those transactions that you captured to get leverage loans, or to be able to at least build up your bank statement where you can be able to get a bigger loan, business bank statement loans, personal bank statement loans, be able to leverage all the opportunities without going to commercial banks. That's big in denying people or giving people a $50 Mickey Mouse card when you could have went to a credit union and got yourself a $15,000 line of credit.
Yes.
So, I just want people to be able to focus on how this money game works. Not the richest person, but I'm not struggling at all. Not struggling at all. Matter of fact, I knew a dude that's 26 that has 7 kids.
Wow.
So when it comes to that, I'm doing better than his ass. He my guy and everything, but he's smooth fucking up.
Straight up. Bear with me one moment. I'm going to try and share something because you were talking about, getting to the money. Give me 1 second here if I can see.
All aboard.
Where is it? Here we go. All right. Are you able to see this?
Yes. All aboard. Can you hear me?
Hey, how are you?
All aboard.
Hey, how are you? How's everyone?
Hi, all aboard. How are you?
Doing good.
Okay. I'm going to share your screen.
Yes.
Yes. All aboard.
Yes.
You have to turn your YouTube off in the back.
Yeah, I forgot. I'm sorry about that.
That's all good. How are you today?
I'm doing really well. I've just been listening and trying to soak up all this information and make some money.
Definitely. So, real deal, you definitely talk about things like stocks and investments, and that's awesome. And that's definitely a field I work in as well, especially when you're talking about dominating it. That's something that I love to do. But when we're talking about dominating in financial transactions and learning about the money, definitely I don't know it all, but I know a lot, and I like to share what I do know. So this document here that I'm showing you is from August of 2019. And as you'll see here, it's from Bank of America. This is public information. And this is showing, their schedules of assets. So this is basically, their quarterly report. But if you notice here, they have line 4. I don't know if this is large enough. Let me increase that. So line 4 says equity investments without readily determinable fair values, and dollar amounts are in thousands. So if you'll see here, basically there's 6.14 million, but there's no dollar sign or comma. So it's likely going to be billions when you're talking about a bank the size of Bank of America, right? And you'll notice here that they put $6.14 billion. So that's basically the stock market. But if you look at their other assets, and this is one of the products that, especially in the Black community, we tend to get wrong. Their general account life insurance assets is only 2.9 million, but then their separate account, they put 19 million. So altogether, they put 21 million into life insurance assets and only 6 million into the stock market. This is Bank of America. Okay.
So what do they know that you think that the regular citizen doesn't know? Because, they're a bank, they're making money. So why is that?
Well, it's the power of cash value life insurance. It's the way that it manipulates the tax code and the way that it accumulates money. So depending on the type of policy, most cash value accumulation policies grow at a minimum compound interest rate of 2%. So to put that in perspective, if you were to get a money market account, your high yield interest savings account, you can Google this right now. Your high yield interest savings account, the highest one is Marcus Millichap, which is Goldman Sachs, at 0.5%. So to put that in relative terms, if you put $100 in the Marcus Millichap account, you have to wait 1 year for that $100 to earn you 50 cents. Again, to put it all relative, remember life insurance on the worst case scenario grows at a 2% compound interest rate. So that means if you put $100 in the life insurance today, you have to wait 1 month for that $100 to earn you $2. So I asked you, would you rather earn $2 a month or 50 cents a year?
Absolutely, I'd rather $2.
Okay. This is one of the things that definitely isn't taught in our communities or to most Americans about life insurance. Okay. Now, did I say anything about dying yet?
No.
Okay. So when I speak to most people, I've been selling life insurance based out of New York for 10 years. Let me step back and tell you guys a little bit about myself and my credentials. 2008, 3 days before Mother's Day, I got shot 5 times in front of my mother in Winston-Salem, North Carolina. Fast forward to 2010, I moved to New York, met my wife, and that's where I ran into Aflac, and I started selling insurance and financial services on 100 Broadway, which is Wall Street. If you left my office, took a left, and took another left, you're looking at the New York Stock Exchange. For a short stint, I did a period as a stockbroker at 11 Broadway at a firm called E.J. Sterling. I also did debt relief and collection for a company called National Debt Relief on 39 Broadway. So I do have a little bit of a Wall Street background. So I've dealt with certain type of clientele that are going to have numbers in these ranges and are going to have alternative needs for their financial services. Prime example, something that bothers me all too often, financial professionals will kind of, speak down on people for, let's say, I have a buddy who will say, listen, I buy Jordan stock, but I ain't gonna waste my money buying my kids Jordans. And that's absolutely incorrect. Because if you don't buy the product, then the stock becomes worthless because you can't move the market, right? Unless you're, Elon Musk and you can dump $100,000 in at one time and actually manipulate the stock, you continuously buying Jordan stock doesn't increase the value. So you have to buy Jordans. So I tell people, listen, if you normally buy 4 pairs of Jordans a month, don't completely stop cold turkey. Just buy 3 pairs of Jordans a month, and the money that you would spend on that 4th pair of Jordans, put in a financial vehicle. This isn't the only bank that did this. Okay. And again, this is all public record. Okay. The Citibank. Okay. Now, Citibank is a little more reasonable in terms of what they put in their equity investments and their separate life insurance assets. But notice, it doesn't say death benefit, it says asset. Okay. This one is JP Morgan Chase. So they put, 6.1 million in equity investments, but they put 11 million in those separate life insurance asset accounts. And what is this? This is Wells Fargo. Okay. And as you can see, 5.385 million versus there's the 5.3, then the 12.9, and then almost another 500,000. Okay.
So can you explain what the hybrid account, life insurance, what are hybrid accounts? It's a combination?
So yeah, those are a combination of, those are likely variable insurance. So when you're looking at life insurance, most people tell you that there's 2, whole life and term. And that's absolutely true, but they're omitting a lot. So it's there are two types. There's term, and then there's permanent. So when you get to permanent, okay, you have a multitude. So in permanent, you have regular whole life, then you have universal life, then you have indexed universal life, then you have variable whole life, variable universal life, okay? And each one of these are a different product, okay? So when someone asks, well, what's the difference between a $100,000 life policy? It should, everything is pretty much the same. Well, there's different types of policies. Just like if you buy a Mercedes Benz, when you go buy an A class, it starts at what, 32,000? But when you go buy an S class, it starts at $97,450. But they're both Benzes, so why the vast difference? Well, there's different bells and whistles with each. So the same comes with a life policy. So that hybrid account is likely a variable, which is a blend of the protection of life insurance, but it is at risk in the stock market. So not only is your premium at risk, but your death benefit is at risk. Does that make more sense?
No, it does make sense. It must not be as reliable, like you said, because they decided that they're going to invest less in that hybrid. It must be more.
It's very volatile. It's variable. So it's very much basing your life insurance in the stock market. It's almost 100% playing in the stock market.
Mm-hmm.
Okay. It's all variable. Okay. Versus most life insurance is what's called a fixed product. Okay. So fixed products have guarantees. Okay. If I was to do a cash value life insurance illustration for you and show you the premium dollars, have you ever purchased a house before?
Yes.
Okay. Are you familiar with what's called an amortization schedule?
Yes.
Okay. So when you're looking at an amortization schedule, it shows you exactly, January 1st, 2021, you pay, $1,200 on your mortgage. It brings your balance here. January 1st, 2041, you've paid X amount of dollars. You're going to pay this $1,200 for your mortgage, and it's going to be that. But you know all of that day one, correct?
Right.
Right.
I have a
life
question.
insurance.
Is there a minimum with the hybrid? With a minimum that they would pay out? Like, what if, the average funeral would cost say for my area, maybe it may cost 10 grand. Would they pay out that minimum? Or is it just like completely just up in the air?
Hybrid is a variable. So anything, if it's a variable, it's just like the stock market. There's no guarantees. So you could walk away with way more, or you could walk away with zero.
Wow, that's crazy.
Well, it's variable. So it's based on what's called risk tolerance. Okay. I'm sorry, say again?
No, I said that's interesting. I didn't hear that concept. And actually, there was a time when I was going to be selling insurance, but I just felt like ethically, the company that recruited me, I felt like they were targeting a certain community, and I did feel like they were targeting like the Black community. And it was I believe
Primerica or Family First?
I cannot even remember. It was a while ago, but I remember it was I felt like the consumer wasn't really getting any benefit. I believe it was term insurance, but it kind of seems like you're just putting your money into something that you could easily not be able to even use, which is essentially insurance. Like you may or may not need it hopefully everyone's going to be alive or whatever. It's something that we know we all need because we all have to pay for those expenses, but it just seems kind of like a scam at that company.
Right. So their motto is likely buy term, invest the rest.
Yeah.
And very famous financial advisors, Dave Ramsey and Sue Zorman, live by that motto. And I don't see anything wrong with that motto if it's done properly. Now, there's some things that you said that are the fault of financial professionals that we don't teach the normal consumer. One thing that you stated was not being able to use the insurance. So that would be car insurance. But with life insurance, yes, we do all expect to die, but that's not the purpose of life insurance. So life insurance can actually prepare you for life events, right? So let's, again, the banks are doing this because it's manipulating and it's building cash value. Real deal, if you don't mind, I guess you don't, I'll share another screen. And I'll do a little.
Nah, man. You have free reign. For all the people that's coming in, it's an open panel. I'm on a business call, so I have to be able to finish that. So you all aboard, please hold everything down. So everything is an open panel. You can share your screen. You have all of the access you need.
Okay, let me. I just stopped sharing. Hold on, give me 1 second here. Let me share this again. You know what? I'm just gonna share my whole screen like this. Make life a lot easier. And
so for all the people that's coming in, it's an open panel. Feel free to join the discussion. Open panel. Feel free to join the discussion. The link is in the chat. And for the people that want to donate, $ Mr. Perfect 23G is my Cash App. $ Mr. Perfect 23G. So Lonzo, I'm gonna share your screen. I'm gonna mute back up.
Alrighty. So, where am I here? Okay. So I'm going to create an illustration and show you guys. Actually, let's compare Mercedes-Benz's to, let's do this. We'll put my phone in there. Okay. So, it's 37-year-old male, right? And we're gonna show you the difference between policies. So the first one, this is life. Let's just go in here and I'll change it later. Whole life and term, here we go. And we'll do value plus term. Okay, and we're gonna do 10, 20, and 30 years. We're gonna do 100,000. So we're gonna base this on $100,000. So the first thing that you mentioned was a term policy, and it seems scammy. And I can understand where, a person can feel that way because term insurance is for a specific purpose and it's for that term, but it's the least expensive type of insurance you can get. So this is for Alonzo Hall, a 37-year-old male, non-smoker, $100,000 policy. I'm gonna have to go get my charger in a second. So now let's take a look at, and this is kind of small, I'll increase it momentarily. So for this 37-year-old male, $100,000 face amount, and we have the annual premium of $150 if you get it for only 10 years. Now, what happens if you don't die in this 10 years? You spent $1,500, but you get nothing back. If you want to keep it year 11, you now have to pay $917 for that same $100,000 death benefit. And then each year, the premium costs more, okay, to keep that coverage because you started with a 10-year term. Or you can start with the most common, which is a 20-year term, and it's a few dollars more per year. It's $196, but it remains that $196 for the duration of the term, the 20 years. So over 20 years, you spent a total of $3,920. Here, you spent a total of $1,357 for the same $100,000 worth of protection. Now, the least common, but probably least expensive term policy is going to be a 30-year term. Now, yes, it's more expensive up front. It's $301 a year versus 150 or 196. And again, this is all for the same age, same guy, nothing else changed, but the amount of years that the policy is in force. Okay? So we go here, you end year 20, well, year 21 in a 20-year term, you're paying $1,725 for that year. And then you almost pay $30,000 over the course of 30 years. Whereas over the course of 30 years, you pay less than 10% of that entire policy. But what happens if you're 37 and you don't die by 67? Well, you get nothing for this, and you don't leave protection for your family. So this, in terms of a Mercedes-Benz, would be what you would call an A class, because it has the least bells and whistles, and it starts at the least expensive price. Does that make sense to everyone?
Yeah, I understand.
Okay.
It makes sense.
So now, let's get out of term insurance. And we're going to let's go to Value Plus. Actually, we'll go to a growth whole life. Okay. Now, when you're looking at whole life insurance, again, for Alonzo Hall, age 37, non-tobacco, nothing has changed. We're going to go for a $100,000 face amount. The only thing we're going to change is the mode. The mode is how you pay. So I showed you term because if you're going to buy a term policy, just pay for it for the year, because it's going to be maybe $300 for the year if you're almost 40. Okay. Whereas generally these, most people pay monthly, but there's more benefit to a whole life policy. So let's take a preview here. Okay. Now, this is going into more of a C class when you're looking at a life insurance policy compared to a Mercedes-Benz. It's still the same $100,000 death benefit, but this one you pay $113 a month. Now, this is nearly what you paid per year for a 10-year term. So I sit with many, especially African Americans, who say, well, why would I pay $113 a month for $100,000 worth of life insurance when I can pay $150 a year? Get out of here, man. That's too expensive. But you're only paying that for 10 years. So if you're 37, you're telling your wife and your kids or your family that I bet I'm going to die before 47. And if I don't die before 47, you get nothing.
It's a very strange concept. Like, that's the thing about insurance in general. You're sold on the preparation of it. It's like,
well, tell the people in the audience how you can leverage. Oh, my bad. Tell the people that you can leverage against your policy.
Well, we're going to go there next.
Minutes.
Yeah,
tell him,
we're going to go there
next. 30 minutes. Give me about 30 minutes. I'll finish this conversation real quick.
Okay.
Well, so you can leverage your interest. I mean, your equity off of your policy, correct? Is that
you mean borrow against it?
Yeah.
Yes, we're going to talk about that now. So this is a whole life policy. So a whole life policy has cash value accumulation. However, you see this word here, annual dividend. Most people don't know life insurance policies, if they're what's called participating, do pay a dividend, just like your stocks or your ETFs. They pay a dividend, meaning when the company recognizes profit, they share that with their shareholders or their policy owners. So you're paying $1,357 a year. I'm sorry, a year in the policy. Now, again, we look at chunks of 10 years. So over the course of 10 years, you've paid $13,571 into this policy. However, you've got a separate cash value of $8,350 in this policy. So if we pull up the calculator. Now my computer is going crazy. So I close some of these windows. Let's do that. And let's see if this one's any faster. Okay, so if we go 13,571, right? And we subtract, what is that? 8,350, which is cash that you have to borrow against or cancel the policy. Oh, geez. Or cancel the policy and take the cash. What is that? 8,350. right? So that equals 5221. So out of your pocket, over the course of 10 years, you've actually only paid 5,221 because you have access to this liquid. Okay. Now, if you'll notice, also your death benefit is increased. It's 101,438, but you only bought 100,000. So your death benefit is also increasing. Yeah. We move to 20 years. So over the course of 20 years, you've paid out of your own pocket 27. Remember, I told you this is just like an amortization schedule.
Yes, I remember.
And it may be small. So 20 years down the line, you've paid out of your own pocket $27,142. However, you have cash value accumulated of, what is that number there? Can you read that for me, please?
$28,193.
Okay. So if you have, and that's your cash value accumulation. So if you surrender the policy, means cancel and have them send you your monies, or you can borrow against it. So let's say you decide to surrender the policy. 27,142 minus 28,193 is negative 1,051. So you paid negative $1,051 to have $115,000 worth of protection for your family, or income that will go to your family tax-free in the event of dying. And this is just a small $100,000 policy. Okay. Now, there's more, because I told you there's more than just a term and a whole life. So let's go here and we'll go to universal. And we'll do a UL first. Okay. All right. Premium, what I put? Percent of target. All right. Monthly. So again, for 100,000 policy, this is a universal life insurance. So universal life insurance is similar to whole life, except it has a flexible premium, meaning you can actually pour more dollars into it. And there's a few more features and benefits that are attached to universal life. So I'm just going basically to the numbers. I'm not going through all of the everything here, but I'm going to show you the meat and potatoes of the numbers. Okay. So again, same scenario here. This one is going to cost you, $693 a year, which is actually a little less than the regular whole life. This one is $57.75. Again, nothing's changed. It's the same guy, Alonzo Hall, 37 years old, non-tobacco user, $100,000 policy. If you'll notice here, though, it does say death benefit option A. We'll talk about that later. So death benefit option A, actually we'll talk about that now, is level death benefit. So your death benefit is going to stay the same no matter how much cash surrender value you have. Now, this also grows at a higher interest rate than this. So this, remember I told you, grows at a 2% compound interest rate. This grows at a 3.7% compound interest rate. So I've done this before, and I've talked to people who are very slick, and they like to be like, oh, well, hey, Mr. Insurance Man, what about if everybody puts in a claim, or 50% of the people who have a policy put in a claim at the same time? Well, the insurance company has taken into account for that. That's why you have this, which is called guaranteed policy values. So guaranteed policy values means if everyone who had a policy with this company put in a claim at the same time today, these are the numbers that would be guaranteed to you. We don't particularly look at these because we're basing these on interest rates. And the prime interest rate changes every Wednesday at 12 noon. So because you can't guarantee what the interest rate will be, we give you the non-guaranteed policy value, but you're locked into that interest rate when you purchase the policy. Now, if you purchase the policy next Wednesday, you might not get this interest rate. But if you purchase the policy today, you're going to get that interest rate. So you're going to get a 3.7% compound interest rate. And it shows you here your net account value, which is now your accumulation value and your ability to borrow against the policy. So from year one, almost half of the monies that you put into the policy, you're able to borrow against. Now, you don't have liquidity for a few years, and you don't get liquidity until, a long line down the way, but you're only paying $57 into the policy versus this one. How much was this a month? $113. Okay. Now, let's take a look again at this option A. Because again, when we're looking at these insurance policies, you're looking at different manipulations. See, most people just say, hey, here's a life insurance policy, $100,000, see ya. But when you go buy a Mercedes-Benz, you don't just go buy a Benz and say, hey, I got a Benz, that's it. No, you want to customize the leather. You're going to customize the color, the interior. Do you have wood grain? What kind of odometer do you have? Is it digital? Is it analog? You know what I mean? You're not just going to go get any old thing off the lot. It's bespoke. It's custom. So again, this premium is the percent of target. So what target premium is just enough to make the policy exist. So again, we're going to go with option B now. So option B is an increasing death benefit. So let's preview again. Nothing else has changed. It's for Alonzo Hall, age 37, $100,000 policy. Let's preview that. And you can interject and ask questions any time along the way.
Okay, thanks. I'm taking in the information, but I do have a couple questions. I'll wait.
Okay. So same scenario, right? Now this one, remember, level death benefit. So your account value, that $306, is not going to your death benefit. Here you have option B, increasing death benefit. Same premium, $57.75, but you have a different bell and whistle. So now your death benefit increases by the net account value. What does that do? Because people talk about cash value all the time in their life insurance, but you don't understand that life insurance is an investment, right? So let's look at how it's an investment. Well, when you start a life insurance policy, you build cash value. Let's say you build, let's say you build $13,000 worth of, let's do round numbers. Let's say you build $20,000 worth of cash value and you die. The life insurance company is going to take your $20,000 and $80,000 of theirs and give your family $100,000, right? But again, let's look at this. So 30 years down the line, you're 67, you build up, again, we're going arbitrary numbers, at least 20,000. Let's say you build 20,000 of cash value. But literally here, you build 12,000 of cash value. The insurance company is going to take your $12,000 and the $100,000 that they promised to give your family and give your family the $112,000. Does that make sense?
Yeah.
Okay. So now we're going to go ahead and we're going to switch from a regular universal life insurance, and this would be an E-Class Benz, and we are going to look at an S-Class. Give me 1 second there. Okay, and we're going to go to A. And we're going to go to percent of target. Yeah, we'll go for percent of target now. Okay, so this is an indexed universal life insurance policy. So again, when I speak about flexibility of premium, so you see here how it's $57.75 and you're building your cash value. Let's say you come up on a windfall and Bitcoin does well and you get an extra $100 a month and you want to pour that into your life insurance to increase the cash value accumulation. You actually have the option of calling up the company and saying, I know I only pay I want to pay $150 this month. So whatever goes from the $57.75 towards your cash value, that extra $100 will go towards your cash value along with it. There's something called the cost of insurance, which is generally how they come with the term policies, because it does cost the company to insure you. So an indexed universal life is attached to the S&P 500. It also has living benefits. So if you get a critical illness, a chronic illness, or a terminal illness, meaning you are going to die in 12 months or less, you can access 75% of the death benefit, tax-free. Chronic illness, meaning things like you can't do 2 activities of daily living, like toileting or bathing, you can get 50% of the death benefit tax-free. And further things like a chronic illness, like end-stage renal failure, dialysis, stuff like that, you can get 25% of the death benefit tax-free. So this builds cash value a lot faster. Again, the guaranteed interest rate, or the guaranteed policy values, is if everybody who has a policy at the same time claims, these are your cash highlight and everything. These are your guarantees in this middle section. The alternate scale is what's called a floor, and the non-guaranteed is what's currently happening. So this is attached to the S&P 500. Are you familiar with what the S&P 500 is?
Yes.
Okay. So for those of you watching who don't know what the S&P 500 is, the S&P 500 is a compilation of the 500 best performing companies in the United States, and they're on an index. That index is like the Dow Jones or the S&P. That's what it is. So this policy is basically $95.83 a month, but it mirrors the S&P 500. So that's why we're able to grow at a 6.2% compound interest rate. Okay, so your annual premium outlay is $1,150 a year. So over the course of 10 years, you paid into the policy $11,500, but you have a cash accumulation value of $6,917. So this is what you have to borrow against, your net account value. Your cash surrender value means that you are going to cash out or cancel the policy and receive all your monies back. So at this point, you would receive $6,683, meaning you only paid $5,000 over the course of 10 years for that $100,000 worth of protection. Now, over the course of 20 years, you've paid $23,000, but you got a windfall of $1,000. Now, this doesn't look very attractive in terms of investments until you realize that your average investment is 20 years of a horizon and your average investment return is 10%. Ask Warren Buffett. Now, we're going to look at something different. Instead of percent of target, let's go maximum non-MEC. So this means the maximum amount of money that you can put into this insurance policy per month without it being a MEC, which is a modified endowment contract, which is a tax shelter, and that's how people like Donald Trump paid $750 in taxes. That's another concept. Everybody can follow my page. I'll do a video on that in the near future. I got a lot of windows open. It's going to start running slow again. So now we're overfunding the policies. So this is the same policy again. Nothing else has changed except for how much money we're putting into the policy. Right? So again, same $100,000 policy, right, as this one. And everything else is the same. It's an index universal life insurance. But again, you have to work with someone who knows how to manipulate this. Option A, $100,000 death benefit for Alonzo Hall, age 37. Nothing has changed. Excuse me. I have acid reflux. And get your health right, because the healthier you are, the cheaper it is. Nothing has changed. I was going to say the acid reflux.
That doesn't affect the policy,
Sorry?
does it? I'm joking. So the acid reflux doesn't affect the policy, does it? But I'm teasing you.
Acid reflux won't, but other things can. Yeah, acid reflux isn't is too much. That's basically just gas. Thank goodness. But so this one you're paying $151.28 a month, right? But remember that cash value accumulation we're looking at. So this one, right, over the course of 10 years, you paid $18,000 into the policy, but if you cash out, you've only paid $3,000. Sorry?
I said, then you're getting less of your money back. Why is that?
You're getting more of your money back. So you've paid
on the other policy, why are you getting more here?
Because you're building more here. So you're paying for $100,000 worth of life insurance, but remember I told you there's something called cost of insurance?
Yes.
So your cost of insurance remains the same. So remember I told you about that flexibility of premium. So what you're doing here is you're manipulating that flexibility of premium and you're pouring more into the cash value because the person is the same age, assuming the health is, regular, they're a normal, regular American healthy guy. You're pouring more into the policy. But what you're pouring into the policy is not for the purpose of a death benefit or paying for it. It's for the purpose of accumulating wealth.
And right? You said as well about the taxes, you're not paying taxes on a certain percentage of it. Is that correct?
Well, this is all growing tax-free.
Okay.
Right? Because you're paying this with after-tax dollars. So when you get to a certain point and you create a modified endowment contract, if you're putting enough premium dollars into a policy and you have it properly set up, you can then write off your insurance premiums as a tax write-off because you're putting it into a retirement fund. Nowhere in here did you hear me say anything about dying except death benefit, right?
Right.
About is building cash. So let's look at the 20-year mark because this is, again, like I said, your average return, your average investment is 20 years. Your average return is only 10%. So what's this say? Over 20 years, you've put in out of your own pocket $36,307. Now, both the accumulation and the surrender value, so if you cancel the policy and get your money back, what is that number there? Can you read that for me, please?
50,953. And is this at the 6.2? Is that at the variable rate or is that guaranteed?
No, it's guaranteed once you purchase the policy. You're locked into that interest rate.
Oh, okay.
So if the only reason it's variable is because let's say I'm talking to you and you're trying to buy this right now and you go, well, I want to wait. Okay, wait till next week. It might be 5%. I don't know. But if you get it today, you're locked in at 6%.
What's the most that it's gone up? I'm just curious.
The
maximum.
Well, there is no maximum, but the highest we've seen is 8%.
It's 8.
In my
when was that?
That was actually in the 90s. So I was like a kid. I was born in 84. So this is like the early 90s.
I see.
So to be honest, like I said, we're in less than a 1% interest rate market. We're in a 0.5% interest rate market. So when you're looking at things like money market accounts, it sounds nice to have, but I can beat the shit out of a money market account with something like this. I'm beating your death benefit by 5%. You've got here liquid cash, half of your death benefit. Right? Now, I didn't show you the manipulation of option B.
Or just a question.
Yeah, go ahead.
I noticed that there's a lot of people that, very wealthy people, are always obsessed with the death tax, quote unquote. Can you explain more about that?
That's called estate shrinkage, is what they're concerned with. And what estate shrinkage is when you die, with or without a will, the state has, people who step in and take care of things. When you die, you have to have a tax return, your final tax return filed. And then when you're looking at passing down assets, There's a lot of estate taxes and management fees that can reduce what you pass down to the next generation. So they use things like life insurance to pass their millions and trillions of dollars down tax-free. And then Paris Hilton gets to run around and have her own TV show. And, Kim Kardashian or, what's their kid, Northwest will have, $1 billion, but it won't actually be from any of, what Kanye did. It'll be from what's called OPM, other people's money. Because he'll put 40,000 in his own name.
You're still getting income off of it, but it's not taxable income. So you're saying that this would be a better place to invest than say the stock market, essentially. Like you're investing in the stock market without being tied to tax rules.
Technically, you could say so, but when you're talking about investing in the stock market, this is where it gets dangerous because people are not what's called an accredited investor. So when you're not an accredited investor, you don't get what's called capital gains tax. So capital gains tax is 20% of what you earn on an investment. The average investor who's not an accredited investor gets taxed at regular income tax. So what that means is, let's say with GameStop, let's say you are an accredited investor and you earn $1,000. You're taxed at 20%, so you're only going to pay $200. If you are not an accredited investor, you're taxed at your average income tax, which is at least 28%. Average American is about 33%. So you're taxed $330 on your $1,000. It's basically like you went to work and worked overtime. So they're going to take more from you. So it ends up being more harmful for you. So what is an accredited investor? Now, there's nothing wrong with not being an accredited investor and investing. That's why I said things like Robinhood, etc., make people like myself almost obsolete. We're not obsolete because there are people who have certain monies and can afford certain things that we still service. But your average investor really doesn't need one of us yet. Does that make sense?
Yeah, makes sense.
By the way, don't let that shy you away from using me. I'll gladly take your money, people.
Right. I had a good friend that worked. He worked on Wall Street, and then I can't remember which investment firm he worked at, but he was saying that like with things like Acorn and it's kind of making that profession a bit more obsolete, I guess.
It is and it isn't. The method, basically now what we're going is less of a commission and more of a fee base. So stuff like this, normally I'd be charging people $150 an hour to sit down and go through this with. But like I said, 2008, 3 days before Mother's Day, I got shot 5 times in front of my mother. So whatever I have to do to spread this message and educate my people, I will do. Does that make sense?
You got shot 5 times? I couldn't understand you.
Oh, yeah. 2008, 3 days before Mother's Day, I got shot 5 times in front of my mother in the Trey Ford, which is Winston-Salem, North Carolina.
Wow. I'm happy you survived.
That's part of what led me to selling life insurance. And the rest of the immortality. Sorry?
So you witnessed your immortality. And actually, I'm kind of interested in this. I really don't like the idea of like life insurance, but from a business perspective, I'm intrigued. I don't like it because, first of all, you have to confront that, and it is a really real thing that is going to happen to all of us. But then again, if you're looking at it as far as your money growing, that's one thing. I think everyone should have enough money set up. Like, we should always work towards having that money on hand because we will all pass away. But if I can make some money too, that's cool.
Yeah. This is definitely, I'm not looking at this type of a policy for the purposes of dying. So there's something we also all need to look at and understand. The wealthy buy at least 7 policies on one life because there's different reasons for each policy. So that's why when you say term looks scammy, I can understand because most people think, well, I have one life insurance policy, I'm good to go. Okay, do you have one pair of shoes? And then never ever again are you going to buy a pair of shoes? Because I remember when they released the Space Jam Jordans in 2011, 2013, 2014, 2015, and 2016, they all look exactly the same. They're white with a little black patent leather around them. But dudes stood in line for hours for 3 years in a row for these Jordans. For not just one pair. I already got one pair of Jordans, I'm good for life. So when people say I already got one life insurance policy, I'm good for life, you're thinking wrong.
What do you do? What can you do a quick little thing on higher value life insurance? Because I've seen some people have like $1 million policy.
Yeah, generally that's the type of policies I sell is multi-million-dollar policies. But before we get there, I want to show these numbers because these are more able to swallow for an average person. For example, if I show you a $10 million policy, you're looking at a $36,000 monthly premium. That's people's annual salary, right? So that's going to blow people away. I want to make sure that it is able to be swallowed, but I'll definitely show you, a concept like that. I should also mention I have my PTIN, my Prepared's Tax Identification Number, and my real estate license in the state of New York, and I've sold many multi-million-dollar properties. So I'm familiar with high numbers. But let's take a look at this, and we're going to go back to maximum non-modified endowment contract, and we're going to go option B. And again, nothing else has changed except for what we're putting into the policy. And then I'll go to the multi-million-dollar policies for you. So again, everything else here is, all equal. But we're paying the maximum we can for the least amount of life insurance so that we can beat up that cash value. So this premium with an option B or an increasing death benefit is $458.58 a month. Whoa! Why would I pay that much when I can pay $151 a month or $95 a month or $57 a month, and it's all for the same $100,000 worth of life insurance, right? Well, let's go again here. So we're looking, you're paying $5,503 a year. So over the course of 10 years, you've paid $55,030. But at the end of 10 years, your cash surrender value, all aboard, can you read that number for me, please?
$63,617.
Correct. So you've got about $8,000 more in 10 years, not 20, than you've paid out into this policy.
It's a faster
if you notice, your death rate is increasing. Sorry?
It's a faster return because I have money in like some bonds, stocks and bonds, and I think I'm getting like 2%, and I felt like 2% increase on that, and I felt like I got a really good deal. But this is more so another way to earn your money at higher interest rate, at a faster pace.
Yes. Now remember, I said your average investment horizon is 20 years. So let's look over 20 years. You put more into the policy than you were buying, right? You were buying a $100,000 policy, and over 20 years you put $110,000 into it, but your death benefit is almost $300,000, and you've pretty much doubled your money because your cash surrender value is $191,833. Okay, so there are ways that you can actually, and concepts where you can actually balloon, and the insurance is at this point paying you for having it. At this point, right? You pay $55,000. Basically, year 9, you're starting to get paid for paying for life insurance. Does that make sense?
Yeah, it makes sense.
Okay. So I also heard you mention something, and it's very important. As I mentioned to Real Deal, you know, the CAAFP, the Conference of African American Financial Professionals, and I'd like to have you speak with me because you said that you were interested in entering the field and that, you know, you got a bad taste. I am, ironically enough, building a team of my own. We are an African American firm. We are brokers, so we're not beholden to any one company. So we work in the interest of our client, not the company. It's a little more difficult because nobody knows who the hell Alonzo Hall is, but you know who MetLife is. You know what I mean? Um, but such is life. And
I
I'd love to
know.
help you build a career.
I'm interested. I have some other things going on that I'm doing that's going to be really hands on. But I will definitely check it out, and I'm always willing to learn new things and new streams of income. I'm actually starting a food truck. I just purchased that, so I'm going to be pretty busy. But
Do
I'll
you have a
list.
business partner?
No, I don't really personally, and that's something that I'm starting to get into a little bit more. Is that you know, having investors. I am kind of the way that I do things is, you know, I prefer doing things on my own, so I don't have to like be accountable to anyone except for myself. Just the way that I learn things. But I know that like growth, you need investors. So that's something that I'm gonna be getting into once I get this to the place that I want it to be. Um, I have actually a friend of mine. He sells insurance, but not life insurance. It's just health insurance. And
Okay.
another friend is that has like a tax is in the tax industry, and he also sells insurance, health insurance. So I might be able to like get them to listen as well. They
Yeah,
may be valuable to them.
gladly. So the reason I asked if you had a business partner, are you seeing my screen?
Yes, I am.
Okay, so you see buy-sell agreement.
Yes.
Okay, so the reason I asked about if you had a business partner, because again, as an advisor, the all-star advisor, as I call myself, I do try to set myself out from other agents, and knowing things like this is part of the reason why. So, what a buy-sell agreement is actually, like it says here, a legally binding contract um, that stipulates how a partner share of a business may be assigned if that partner dies or otherwise leaves the business. Okay. Most often, the buy and sell agreement stipulates that the available share be sold to the remaining partners or to the partnership. Now, again, I just went on Investopedia, but a buy and sell agreement is a life insurance policy that covers the business, and it actually ensures your exit strategy for the business. Okay. So you can go on Investopedia and look this up yourself. So, you know, you're not taking it from me. Who's this guy? He gets
No, I'm
paid for
familiar
it.
with those too. I'm familiar with buy and sell agreements. That's really important because you know you always have to have a plan for when, if and when things go left in business. It's really important. And also being able to, like you said, get your share back. Like you have the first option.
Exactly.
Buy.
Okay.
Well, let me go into those higher face amounts. So you were saying like 1 million or 10 million? So let's
I don't
do
know
10
about
million.
that. I'm just curious about the one, but you know, I wanna see.
Okay. So let's first put here, again, let me close out all these others. So again, nothing else has changed. It's for Alonzo Hall, age 37, regular guy. Again, we're going option A, but we're going percent of target. So target premium, again, is just so that the policy doesn't do what's called fall apart. It's just so that the policy remains a whole life policy, or at least to the age that I set, which was age 67. But yeah, you can use life insurance to fund college. You can use life insurance to buy a house. You can use life insurance as a collateral assignment. There's a boatload of stuff that life insurance is for because it's life event insurance. It's not death benefit. Okay. So this policy right here, 10 million, only $10,000 a month, right? And let's check it out with option B. Again, this is for the percentage of target. Okay. Nothing else has changed. And again, this is the S class of life policy. So this is going to have, your bells and whistles. Now I'm not going to look at variables because those are investment grade products. And then we get into, legal territory. This stuff I can, show you freely. So this one with option B, it's still only a $10,000 a month premium. Okay, so let's see if we can make this a little more expensive. So let's leave it at option B, 10 million. But let's go ahead and we're gonna go for the maximum you can put in for a non-modified endowment contract. And let's preview that. Okay, and again, nothing's changed. Same person, same age, everything else is all the same. Death benefit is the same, but again, features, bells, and whistles are different. So this one, when we maximize it, again, same $10 million policy, $44,000 a month versus $10,000 a month. However, $10,000 a month over the course of 10 years, you pay $1.15 million, and your accumulation or your surrender value after 10 years is only $900K. Now this one, you put $44,000 a month over the course of 10 years, you paid $5.3 million. But you've doubled your money, because if you cancel, you get, well, not double, but you've increased your money. If you cancel or surrender the policy, you get $6.4 million back. Okay, this is also, again, an increasing death benefit, which is called an aleatory contract. So as you're building this cash value, right, you're also looking out for your future generations. If I die, I didn't just build up $6 million for no reason for them to give my family $10 million. Now they got to give my family $16 million because I'm keeping the insurance company on the hook for that $10 million. Does that make sense?
It does.
Okay.
It does.
So now let's take a look at the concept where at 37, let's say I have $1 million from a policy that, I set up with me years ago. So let's look at another product, because often we talk about when someone says I sell life insurance, that's not the only product they offer you. Okay, just like McDonald's, they advertise the Big Mac and fries, but when you go there, they have apple pies, ice cream, soda, milkshakes, salads. Well, I can help you with your Section 529, your 401k, your retirement, your long-term care, your disability, your business owner expense. There's a lot more things. But we have to start by building your financial foundation, which is actually your life insurance. And if I was to build a house and I started with only investments, that would be starting building your roof. And you'd fire that architect because you'd be like, you didn't dig a hole in the ground and pour some concrete. What is my house going to sit on? Unfortunately, because Black America has been blocked out so long, we're coming into it backwards. So let's say, we'll do a single premium immediate annuity. So let's add, what is that? That's 10,000. Right, that's $1 million, right? All right, so we're gonna put, where's the lump sum? All right, boom, input premium. Boom, we'll do a non-qualified. So this is a single premium immediate annuity. Now, let's say I'm not 37 at this point, I'm 67. And, 30 years ago, I set up this policy, right? So now I'm 67. So at age 67, I built up $1 million on a cost basis of $10,000, and I'm going to put in a single premium immediate annuity of $1 million because my life insurance policy built up $1 million cash, and I didn't buy it to die. I built it so that at 67, I'd have $1 million to retire with instead of relying on my company's 401k. Okay, so this will guarantee me $4,600 a month for life. So at age 67, they expect me to die in 18.4 years. So they're saying that from 67 to 87, for $4,600 a month is about $1,029,000. Now let's say I live past that 18.4 years, right? And I live to 90, right? Well, I ran out of money. And that's the problem with a 401k. If I had $1 million in that 401k, it's period certain. So once that $1 million is gone, bye-bye, you got to go back to Walmart and check receipts. Or you sit with a financial professional like myself, who knows what we're doing, and we go through your plan and we set everything up. So now you've got $4,600 a month until the day you die. So you don't have to go back to Walmart and check receipts at 87. Because even though you ran through this $1 million, an annuity is the same thing as a pension, payment till death, which is what a mortgage is, payment till death, except you are paying out in a mortgage and you are being paid back in an annuity, AKA an IRA. And this is not a Roth, which means you're paying with tax, with pre-tax dollars, so you're paying it before you're taxed, and then you're going to pay income tax on it annuitizing with a Roth IRA. You've paid taxes on these already.
Because I'm sorry. What?
No, you had a question.
Oh, okay. I wanted to mention something. That I think that's why it's important for us to get into all of these different streams of income, because, like, well, my family's from like the islands, from Dominican Republic, but you know, being an African descendant person, we've been kind of shut out from these streams of income. Like, I remember I was just researching something about Tulsa, Oklahoma, and how, you know, the insurance companies didn't even pay out on the policies that a lot of the people had. So, you know, I think it's really important to learn about these different ways that other people know on how to have passive income.
Exactly. And this is also if you create an annuity. So this is an immediate annuity. So what is an immediate annuity? That means that you take the money, you put it into this account, and within 12 months, you're going to start getting the money back. So you see this, it's saying that I assume that I put this $1 million in it today, 8/3/2021, and I'm going to start getting $4,600 a month every month for the rest of my life, 9/2/2021. And this is a guarantee because this is a contract. This is a life insurance product. So you don't need a securities or investment license. You don't need a Series 6. You don't need a Series 63, 65, Series 7, Series 3, Series 4, any of that. All you need is your life, health, and accidental life insurance license to be able to sell this particular, well, actually, this you might need actually a securities license because this isn't, well, no, this isn't indexed. This is a fixed annuity, so you don't need a securities license. The other product I'm going to show you is an indexed annuity. Oh, they have the 10 index. I'm going to show you the 7 index. Okay, but yeah, the absolute worst thing is that, and this is why today we really don't buy it, but there's an article that shows, believe it or not, Black people, and I believe it's a Yahoo Finance article. Black people buy life insurance more than white people. We just buy it wrong. And there's a lot.
You changed the age on there. It's showing 67 now.
Yeah, I know, because I'm going to change it back to 37. But I showed 67 for this because at age 67, at age 37, you don't qualify for an immediate annuity. It's a retirement product, and you have to be over age 59 and a half before you face a bunch of tax penalties. So this is a retirement product.
Okay, I'm reading it here. 59 and a half, maybe subject to a 10%.
Yeah. Oh, yeah, it's actually, I didn't even realize it's right here. So, yeah. But again, so this would be for building your retirement. So let's say, right now, I don't have a bunch of $1 million, but let's say I got 25 grand and I put it in there one time because I'm 37. Come on. All right. And we'll preview that. Okay. So now I didn't allocate it to the S&P 500. So right now it's growing at 1%. But if we change the asset allocation here to the S&P 500 1-year point to point, it'd be set up to grow at nearly 4%. You see that's 3.9%. And actually the current participation rate is 100%. So as opposed to the 1.45%, an advisor like myself would put your asset allocation here, 100%, and get you nearly 4% on your money. Okay. So this is a one-time premium. This is a dude who won a scratch off of $25,000 yesterday. And he calls me up and says, I want to put some money away. So you're going to get interest credited, so you do have accumulation value. It also has a death benefit because he's not old enough to retire from it yet. But he only put $25,000. Now, the first few years, there are penalties and fees for canceling it. And obviously, there's more penalties and fees the farther away from 59 and a half you are. So now let's say age 62. Now, again, I've only put $25,000 away once and never touched it again. It balloons. It grew me $11,000. Now, yeah, it took 30 years. But if you go to any bank, if you open up a high yield interest savings bank account with Chase Bank, they will give you 0.02% interest. Like I said, if you look up a high yield savings account with Marcus Millichap, aka Goldman Sachs, actually, let's do that. High yield savings account.
Rashid, come up on the panel, Rashid.
Best high yield savings accounts 2021 from Bankrate. Best high yield savings accounts in August. Now, generally, there's a minimum deposit amount of $25,000. So you can't go to these accounts with $100 and think you're going to open them. Marcus Millichap at 0.5%. Oh, no. Wait, Vio Bank has a 0.56%. Now, they say you can have a minimum balance of $100 for the annual percentage rate. But so if you leave $100 in there, you got to wait a year to get 56 cents, right? Just put $100 in a life insurance policy and you're going to get 4 years worth of this in a month, right? And 2% interest, right? So this is Marcus Millichap by Goldman Sachs, basically the number one, financial services firm out there. Or not the number one. The number one is actually Morgan Stanley, but Morgan Stanley is very racist or discriminatory against African Americans and females. My mother-in-law used to work there. And there is another high-profile African American woman who recently got fired in December 2020 for Morgan Stanley, who was hired as their VP of diversity, and they ignored the shit out of this Black woman the entire year and then fired her for no reason in December.
Well, I guess she did her job. She let them meet their quota, and then they're diverse.
That's why we need our own corporations, man. That's why I said 2 years ago, motherfuckers need to start thinking more corporate. And we're talking about your own corporation. Because if you can put in 120 hours of all your blood, sweat, and tears for a Morgan Stanley or a JP Morgan or whoever the situation is, you need to be able to put that work when it comes to your own corporation entity. Think like a corporation. Think like yourself as an entity.
So your highest money market account is 0.56%, and your highest high yield interest savings account is 0.5%. I just realized this was the high yield savings and this was the MMA account. So, like I said, even at 1% growth, you're still beating the hell out of Marcus Millichap. You see what I'm saying? With that balance of 25 grand, right? So these are just some of the strategies that we have to learn, because especially with African Americans, if you have a criminal history, you're ineligible for life insurance. So I have a bunch of friends who, screwed up and were in the back seat of a car when it got stopped and they had a joint in the car and then they went to jail. Well, now he's a grown man and he can't be responsible and get life insurance to protect if something happens to him. He leaves generational wealth for his 2 daughters. Well, he can do that with an annuity. He's going to basically self-insure.
I always pay attention when old white men are doing things and they're fighting for something.
Mm-hmm.
I'm like, okay, there's some money behind that because they don't, whenever they're getting really upset and out there damn near about to protest about the death tax, as they call it, and, they try to make it seem very morbid and scary. But really what it is it's a tax loophole.
Yeah. Like I said, estate shrinkage. So a lot of the things they'll do is products like this. They'll sit with estate planning attorneys and they'll put things together that can shelter their money so they can enjoy their money while they're here. And then the government can't get any of it and their future generations can enjoy their money while they're gone. For example, you heard me mention Morgan Stanley. So the creator of Morgan Stanley, Henry Sturgis Morgan, is the grandson of J.P. Morgan of J.P. Morgan Chase Bank. I don't know if you guys knew that.
Yeah, I heard you. I know what you mean.
So, yeah. But that's it for me. My laptop is about to die, so I have to probably stop sharing and stuff. Let me see. How do I do this?
Stop screen.
Oh, okay. There we go. Thank you.
I really appreciate the information. I'm going to do more research on it.
Not a problem. I'll put my information in the back so you can
put it in the front.
Well, yeah, I guess let me pull up YouTube. I'm not on YouTube right now. Hold on.
That way I can get it on my phone. I can get the link. So I usually use my phone. Oh, wait, no, you're not your phone number. You don't put that in the front.
Yeah, no, that's I put it out there. I don't mind. And then I'll put my but yeah, my YouTube channel is literally my name, Alonzo Hall, the All-Star Advisor. Please follow.
I will.
And we'll definitely I have your contact here. And definitely I'd love to have you work with me. I'll put it to you like this. I just recruited another young lady from Colorado who was with Charles Schwab. But again, in this industry, there's a few things. She's a 27-year-old African-American female in Colorado. When I got into this industry, my adopted brother, his uncle, who's a full Caucasian man, has a money management firm located here in Connecticut and in Florida. He's a snowbird. And I asked his advice and he said, well, I'm a white guy with connections and money and it was hard for me. You're a black kid from the hood who doesn't know anybody. Good luck. So the treatment that you get in this industry is, sorry?
That's putting it bluntly.
Yeah, but the treatment in this industry that you get is a little difficult sometimes. But with things like the CAAFP and supportive firms like mine, CG Wealth Solutions, and agents like myself, she felt that it was better to leave a $60,000 annual income and come join my team to be 100% commission and leave a name like Charles Schwab because of the support that she gets. And she's a rock star right now.
Rashid, turn on your camera, man. I got to do this with everybody. Rashid. Okay. My man, Rashid. What's going on, bro?
What's going on?
Hey, salute, brother.
What's going on, Lonzo?
I'm doing all right.
Yeah.
Oh, shit, damn.
I was actually doing a live earlier talking with this young guy, but that's like I said about Lonzo, man, that's one of my favorite things, man, talk about life insurance because, a lot of people don't know about financial wealth, man, regarding life insurance or just in general, anything
That's very a
regarding,
structured manner.
money.
Because like annuity plans be setting people up where somebody that have $100 million annuity plan, he could get $500,000 a month for the rest of his life.
Yeah.
350,000 to 500. Them athletes need to figure out how to do something like that, man. Them athletes be getting them gigantic contracts.
Hey, that's what one of the guys I bought one of my policies for way back. That's what got me into one of the policies I actually have, because he had an athlete that got a endorsement deal. Like I think it was like anywhere from 5,000 or so much a month, and pretty much he was saying that I got this money, I don't really
Mhm.
need it, but like the guy, he was like, I need to do something with it. And so I know someone told me about life insurance. So what's my options? And he basically told him about the policy to where since you don't need it and it's gonna continue giving it, just throw it in the policy and let it rotate. So by the time you retire, this how much money you'll be done gain, and this how much money is for you. And he took his advice.
Because at the end of the day, that money can be used and leveraged, like $350,000 to $500,000 a month. That could be leveraged to be able to acquire properties. That could be used to be able to leverage for business trade lines. You could be able to have so many corporations set up where a line of credit could be able to build upon it and have an authorized user from one corporation. Credit cards to pretty much do a call in and have certain things as an authorized user when it comes to members and partnerships in the company. But life insurance policies is definitely something that I'm more or less writing down, because I heard of cash value life insurance policies, but I didn't know which company was credible, because they always talk about how cash value life insurance policies was reliable when the Great Depression was happening.
I heard
The
that
first
too.
Great Depression. The first Great Depression. Cash value life insurance policies was actually resilient and still providing people the dividends needed, and people do reinvestments in compound interest off of reinvestment. So like similar to a share buyback, just reinvesting. So, just having all those things lined up is definitely a vital situation of people need to be diversified. People that do have large sums of money need to understand that with annuity plan, you can be able to preserve that, because there's people that take out their retirement money of 50,000, thinking that 50,000 is a lot of money, and not realizing that was supposed to last you for the rest of your life. Because my father told me all the time that he knows a dude that pretty much took his whole retirement, just spent it and blew it. It was for retirement of $53,000. He act like $53,000 is all the money in the world.
Yeah.
Not realizing that was
Man,
just supposed to be just a simple lifestyle.
I mean, like I said, I was in the luncheon that Lonzo had with a lady. She was I forgot what I think it's like an attorney or something, as far as helping people with their life insurance policies when they get the trust.
Yeah, she was an
And
estate planning attorney.
yeah, and she was talking about the young guy that actually got like close to 3 mil or something like that, blew it all within almost a year and a half, partying, going to Dubai. The first thing he bought was a Ferrari. Like no one taught. They got the money for him, but no one taught him how to take the money and make it last. How to flip it into properties, business. Instead of buying that Ferrari, buy that Ferrari year 2 or year 3. Don't buy the Ferrari when you
Man,
first get the
you
money.
could have leased it.
Invest.
You could have leased it and wrote it off on the LLC. You could have created the LLC and leased
Yeah.
it,
There was
have all the lease payments
a
written
person.
off.
He was out of Florida.
Mhm.
There was a guy out of Florida. I'm sorry. I'm thinking there's like a delay or something on my internet connection. I didn't mean to cut you off.
No, we can hear. We can hear.
Okay. There was a guy out of Florida. I actually met his brother. And then I researched like I looked up his story or whatever. He's out of Florida, and he won the lotto. I forget for how many millions, but it was several million. And then his problem was he was helping like everyone, right? And he ended up running into someone that said she was a financial advisor. What she was really doing was funneling his money, and she was able to get a power of attorney. But then he actually ended up getting killed. Like,
Oh my God, I saw that one.
you saw that?
Yes.
Yeah, and I met his brother, and it's like, so that's another thing, like getting tied up with the wrong financial advisor or with a person that doesn't have your best interests. Like, because she wanted to get the insurance money and all of his money. But, you know, things like that always catch up to you eventually, or I would hope so.
Always. Investigations, private investigators. People don't just take an L. That's where they.
Hey, I know this person. All right, I'm gonna tell him right now because I know him. Basically.
Okay, so you know him. Okay, I thought he was a troll, man. I didn't know.
Nah, he good people. I know.
My bad.
So basically, I actually I got one policy that, you know, pretty much can get me to the sum of $3 million over the course of to 78. And that's just as long as the market stay the way it is, you know, and even if I don't make it to 78, the policy that I actually have, it's steady growing. So let's say I die at 68 and it's a sum of $2 million in there. It goes to my family. Let's say at 68, the sum of 2 million in there, and I pull out money, you know, for me to, you know, business, helping the kids, buy houses. There you go, right there. You know, and like I said, you know, Alonzo, I talked to him. I have pretty much all three policies. I have term, I have whole life, and I have universal life. And as far as with my term life, I'm actually looking at getting some more term life when I get a little older. That's just, you know, just a cushion to blow, you know, for grandkids, you know.
So we just have everything lined.
Yeah, because even the funny part is, man, when I talk to Alonzo, I'm actually considering putting a life insurance policy on my wife's parents because, you know, my parents passed. So even my grandma, she was the oldest. The only one I have left in my family that's older is my aunt, and she's in her 60s. But other than that, I'm thinking about putting a policy on her, thinking about putting a policy on my wife's parents. You know, I had a call, but yeah, I'm thinking about putting policies on them. And to the extent, if something, what I cut out?
No.
I can hear you.
No.
Okay.
I first I had a question for Lonto because I didn't know you can even do that.
Ahead,
I didn't even know you can put a policy on people that wasn't directly related to you. I heard the regular was putting policies on
grandparents can do it with children.
Well, basically, Alonzo will tell you. I'll let him tell you, basically.
Yeah, so
because I'm not familiar with it.
No. Finish your question. I want to make sure I get your question right.
Okay.
I know grandparents can put can get an insurance policy for grandchildren, but I didn't know that you could do it.
Damn,
I'm not doing it.
Okay, now can you hear me?
That. I'm actually
okay, now can you hear me?
We hear you.
Yeah, we hear you.
Okay. Like I said, now I didn't even know that you even can put a life insurance policy on people that was not directly kin to you unless there was a waiver signing off on it. Now I heard of record labels putting artists on insurance policies, but isn't certain things like that is like in-house or pretty much a private private insurance company doing insurance policies like that?
No,
that's my question to Alonzo, because I don't know. I'm not a life insurance policy whiz. That's out of my criteria.
When you're looking at like music artists getting policies from the record label. So that would be something called COLI, corporate owned life insurance, where the corporation purchases the policy on you. So the only way that you can get a policy on someone who's not your direct kin is to have insurable interest. So when I ask things like, do you have a buy-sell agreement? So a buy-sell agreement is a life insurance policy on two people who basically aren't related. They're just business partners. So technically there's no insurable interest except for the fact that you guys are entering into this business venture together. Something like a collateral assignment would be, I'm buying a building from you and you're going to, own or finance it. But as collateral, I have a $1 million life insurance policy for this $500,000, building that you're selling to me. So in that situation, I would get, $1 million 20-year term, since I'm going to pay the debt off in 10 years. But if I miss paying it off in 10 years, I got the whole 20 years to, die if I die, to die and have you still be paid back. Though, the goal is to not die. The goal is to pay back that loan. You'll also see people get a term life insurance for something called mortgage protection, which is when you buy a house, usually within 18 months, you start getting a call from an insurance agent who says they want to set up your mortgage protection insurance and disability packages, or income protection plan.
And basically, I was going to directly actually talk to them about setting up a policy. I pay the policy, regarding, and it's going to be, the beneficiary will be me or one of my kids. So if say something happens to me, then the kids will be the beneficiary.
Yeah, that's something we can do. We'll set up what needs to happen in those situations. And this is actually a great question, and I think, Real Deal, this will further answer your question, as well as you, All Aboard. Yes, grandparents can get a policy. Parents can get a policy. Godparents can get a policy. Prime example, my godson, just to show off on his baby shower, his father's best friend bought my godson a pair of baby Jordans. And I was like, man, you stunted. You got almost the most expensive gift. He was like, what? I got him Jordans. I got him the most expensive gift. I said, oh, I just bought him $30,000. What do I pay for that? $9.10 a month. Because my nephew was, 14 days old when I bought the policy. So it doesn't cost much to insure a child. But in order to do so, we do have to have the consent. So if a person is 15 years or older, you can get a life insurance policy on them. However, you have to they have to sign for consent.
Yep.
Now, there are a couple of loopholes, and unscrupulous agents who will, do a little workaround. Generally, in final expense policies, you'll see people work around those in that manner. And final expense policies are a policy that I didn't show you guys, but you're all familiar with it. You've seen the commercial with Alex Trebek or Colonial Penn. Oh, Sally, I fell the other day. What's going to happen to my family? Well, I called Select Quote and got myself protection for $9.95 a month. Those policies are never $9.95 a month, but it gets people to calling. So there is that.
Yeah.
I have another. I'm sorry.
Go ahead.
Listen, no, I've spoken a lot. You hadn't speak.
No, go ahead. I'm here to listen as well. I've been on several panels before.
There's something that I've seen with celebrities as well, like where they're, like, for example, Mariah Carey. She insured her legs. How does that work? And is it basically that? I mean, because her legs might get hurt. How do you insure something that has no value to anyone but that particular person?
Give me 1 second. I have a phone call coming in.
Okay, I'll break that in. So basically, because I was talking to him, I was doing a plug the same way. The insurance company that insured her legs are one of the insurance companies that insured my business when I had a transportation company because I had to have $1 million policy on the on my vans, and to the sum I think $500,000 to $1 million for each individual in the vehicle. So it's Lois of London. So basically, she has her legs like David Beckham. He's insured his legs. You know, with her being her legs the way they are, you know, pretty, and something happens while she's dancing, breaks her ankle or something like that. That's when the insurance kicks in. Depending on what you get the insurance for, that's when it kicks in. So David Beckham, let's say he's big world renowned soccer player. He breaks his legs. That's his bread and butter. That's how he provides for his family. That's how he makes his money. His legs are gone. He can't play soccer anymore. So how is he going to provide? That's when the insurance kicked in. I mean, you can actually insure just about to the sum of almost anything, you know, say your arms.
With Lords of London. It seems like it with Lords of London, but I just don't understand how is the company, how do they base it, and how are they making money from that? Like, is it just because you can be very specific in your policy when you deal with them? Is that what it is?
Yeah, pretty much to a degree. It's, let's say, how can I put this? Get a lot of noise in the background. But basically, you know, that's like with life insurance now. You're not wanting to get hurt or anything happens, but if it does, that's how you're protected. So basically how they make money, they put money into like high interest bearing accounts. So long as you're paying, they're tripling and doubling that money through other policies. So let's say an insurance company has about 1,000 policies, all given the rate of, you know, $1,000. Then put it into a high interest bearing account, which most companies, I found out, if you're going to do the highest account, I think it's the international rate or something, to where I forgot the percentage, but basically they take that money, drop it into those accounts. That 100,000 flipped into that million. You know, you might get 5,000 a month, 20,000 a month just on that. Now, if you were to do it, you know, with the little money or some of that we have to try to do it ourselves, we're getting like less than $5, you know, if that, $150, and that's being generous. So that's why the insurance companies can make those type of investments to where they can insure your legs for $1 million, and to the sum, if you don't have no incident or anything within 10 years, or let's say 5 years, they made that $1 million in the first 5 years. So everything else is profit. Because there's a company that I was talking to one time, they were basically having this new policy, which to me is crazy. They have a policy whole life for the 20-year. It's more like term, but 20-year whole life policy. And if you don't die within those 20 years, they actually give you the money back. But guess where the interest going? The interest is going to them. And that policy, it was shocking to me, because I'm like, it sounds good, but I'm like, why not get the interest? If I can't get the interest, it only benefiting you, it's not benefiting me. So a lot of people look at it as, go ahead.
They're pretty much putting your money. You can put your money in a like under bed in that instance, because it's not going to be as much benefit for you, the consumer. They're pretty much just holding your money.
Yeah, to basically. Yeah, and see, the more people they have for the policy, the more off they'll be. And see, what you couldn't put it in, you're not going to gain that much interest like they are. So it's like going against the whales. You know, you take $1 million and go buy stock in Tesla. Well, the company, they can take 40 million and go buy stock in Tesla. You know, so that's how they're able to stay afloat. The money that they put in plus the interest compared to your money, that's why they're able to insure legs, you know, hands, all kinds of things. Voice from singers.
All
you know.
Right.
Go ahead.
Yeah, I'm back. That's actually a great question. It's funny. My boss called me right earlier, and I forgot to call him back. So he was like, "What's going on?" But in terms of so that's a different type of insurance. The life insurance is life, health, accidental, financial. insuring someone's legs is property and casualty insurance.
Yeah.
I happen to
Makes sense.
also have those licenses. So when you're looking at property and casualty, insuring someone's legs, there's things called personal lines and commercial lines. Then there's something called surplus lines, right? So personal lines and commercial lines are what you see Allstate, State Farm, Liberty Mutual, so on. They insure, your home, your car, your boat, maybe your jewelry, and, maybe your business, right? But then you have surplus lines that will go further into your business. And that's where you have companies like Lloyd's of London that will insure, your voice or your legs or an event. Those generally hold premiums where, you aren't going to use the insurance, right? So you're just paying for the premium for the worst case. If Tina Turner gets beat in the legs, then we'll get some money back because she can't perform anymore. And that's why we're insuring her legs. That's if Mariah Carey loses her voice and can't perform anymore, is why we're insuring her voice, because we're insuring the fact that her voice is going to give us some money. And if her voice can't make us money anymore, we have something there that if she can't use that voice, then we're good. Does that make sense?
Yeah, it does. It's just, but for me, I think it's also, it seems as if, they understand that the average person doesn't want to break their legs. So it doesn't seem like a very high risk thing for the company. And it also gives you clout. Like, because, man, I don't think her legs are worth $1 billion, but, it sounds really good to hear. Like, but it's more from a business standpoint.
Yeah. But I was just saying, that's the thing about putting value on something. You, depending on the person or you can kind of set the tone and value. That's like you have a Ferrari. You can say this Ferrari is worth $1 million, but if you put certain features on here, you can say it's worth even more. That's like a lot of guys who have old school cars, when they, just original everything, it's nice, but then when you add more features to it, you set the tone of that value. That's what most people are doing with their legs and their voices, because even with Mariah, like the leg thing, I'm kind of lost with that one. I mean, I guess because she dances and moves around, but more or less that's a line of her performing. So that's how most artists make their money in performance, doing shows versus doing albums. The company make the money on the albums, and now they're trying to get into the performance ring because
The 360.
Yeah, I mean, because you look at the baby, he said he get 400,000 a show.
Jesus.
Like, why would you leave that money on the table? That's like Bootsy. Bootsy would do he would do like 30,000 or 20,000 a show, but then he'd do like 3-4 shows a night. Like he'll start at 8, do 2 hours, go to another club, do 2 hours, go to another club, do 2 hours. And he's made $80,000, doing that. It took him a little work, but compared to the other guys, they doing 100,000. They only getting booked for one night. Where this guy, he can go all weekend and just do like 3 or 4 shows and make that 100 and some.
I noticed that that's something that newer artists learn from older generations or previous generations is becoming your own business, your own boss, becoming like leveling up in that sense, because those deals, like there's so many celebrities and singers and whatever, and they've made companies millions and maybe more of dollars, but they're in poverty, or they, people like what's one of the guys that just passed away? It was the Like Whoa guy.
Biz Markie.
Biz Markie just
like
passed
Nipsey?
away.
Oh, you say just passed away.
Well, recently he was the one that said that song Like Whoa. He was related to DMX. Black Rob. So he was making millions of dollars for Diddy, but he died and he really didn't even have a place to stay of his own. Like and that's because those contracts. So now I noticed that a lot of the newer artists are not getting suckered into those deals because they were trying to change it to a 360 deal where they get money from everything that they get a percentage. But that's why sometimes it's better to be independent. And I can see with you guys with your field, like it may have been better to work for like a Goldman Sachs in the past, but I think now it's probably better to kind of like go out and do your own thing and kind of create your own company.
Yeah, but you learn all you can learn, and that's when you're able to spread your wings. That's why I tell a lot of guys that get into any type of industry. If you get into any, like with me, any industry I try to get into, the basis of me is to learn and study. A lot of guys don't want to put in the work. They don't want to have mentors. They don't want to have anybody tell them what to do. Sometimes you have to fall on your head. You have to sign a bad contract to where you can understand the game or put somebody else ahead. But then also, if you surround yourself around the right people, they'll inform you on that so you won't have to make the same mistakes. And always
man,
go to that same term.
Because you hate playing catch up when it comes to contracts.
Big facts.
You hate playing because your career, man. You can only be hot for like 2 summers, then you own your masters. But what about the 2 summer hits that wound up making multi-millions of dollars for the Universal, whoever that's top, who owns 300 Entertainment?
Lyor Cohen.
What's his name?
Okay.
Lyor Cohen.
Yeah,
I actually met him a bunch of times.
There's also another point of that though, because the benefit of the industry is they have the connections, so they can do things like when one of their hothead rappers or singers or artists gets into some trouble, they can do things like get you the top lawyers, and that's the hard part about going out on your own. And so I think it's really important to, like you said, Sheed, to soak up as much game as you can and get as much experience as you can, but not to be fearful about venturing out on your own. So
yeah, but it all comes from that mindset, because you got to look at this. The baby, he's time with QC and money when somebody had looked over the contract. But
God,
I'm in a bad area.
Damn.
Dang.
Nah, we can hear you. We can hear you.
Oh, okay. I was about to say I think it's a bad area, man. But yeah, man. When it comes down to it, they were complaining about that, and from a standpoint, the little baby was like, I know I'm gonna get a screwed up deal, but I'm only doing this to where my label can reap the benefits for my artists. So yeah, they're gonna take a little money from me. They're gonna take majority of the money from me. But when I own the label, I get to control certain things, because you gotta understand, all the connections you make in the industry, it works for your benefit while you're in the industry, so you can go around and and bump elbows with certain people.
I mean, look at Kodak Black. He would have never been able to get that pardon. Who would have thought? Without the connections that he made. And I always felt that guy, he's a little weird, but I think that he has he's a deeper thinker, because
who was that?
Kodak Black. From the beginning, he started his own label, Sniper Gang, and it doesn't sound like much, but he set himself up to be in a position where he's rubbing elbows with people that know the president. You know what I mean? Like, so that he can get out of a situation. Like, he had really good lawyers, and that was because he had the label connection. So being an independent artist, you're not going to have those connections. You're not going to know about these financial streams. I'll tell you guys a quick story. I was at dinner with a friend of mine once, and we're sitting at this table. He's in the NBA. We're sitting at this table, and I'm looking around, and all of the people that are at the table except for us were old Jewish people, right? And he was soaking up that game, and they were giving him that information about business and things like that you know, you don't always get access to if you keep things more like if you stay inside of one box only. So I think that's the thing that's so good about the internet is like we can make the connections now. Yeah, that was what I was saying. I wasn't saying anything else.
Oh, I definitely agree with that. I think those connections are a huge thing, and even when it comes to like the rappers, um, even a lot of the independent ones, a lot of that ends up tending to be a facade. Um, Again, just working on Wall Street, I have advisors who work with rappers, and ironically enough, I was having a conversation. I was like, I'm jealous of you, man. You got, all the rapper clients. He was like, man, these dudes are broke. They live paycheck to paycheck. Which was just ironic because, it doesn't look like that to us.
But then, I mean, that just goes to say, having a good financial advisor or being able to make good money decisions is really, really important, and that's something that I'm happy that there are people starting to focus more on that instead of just focusing on just the image. Now, it does take money to make money, or sometimes looking like faking it until you make it is also a thing. But I've always noticed that the people with the most money always pride themselves on appearing to be poor. And I don't understand that mindset, but it works. You know what I mean? Like Warren Buffett, there was an article I read where he was saying that he was like your average billionaire. I don't even know what that means. Like your average billionaire. But
there's no such thing as an average billionaire.
Right. But sometimes the optics, we have to sometimes you have to learn from other people's success. So that's my opinion.
Because really having avenues of people that you can be able to have on your roster that can do the brand collaborations and the partnerships and getting management fees, that would be the better route. Instead of being the actual celebrity, the management fee definitely would be more lucrative on the back end. And you can be more flexible where you don't even have to be superly talented. The management would pretty much solidify. He understands how to hold people accountable. He understands the markets. He or she understands how to be able to get in connections with people without having to be in the spotlight. So really, it's all about helping people make money, man. The most money that you can be able to do to be able to help people make money, the more that you don't have to do all the strenuous things of being an artist.
Yeah, I think what's the guy named Dave East? That's what he was actually like managing the artist, but his artist went to jail, what made him step up. Someone's telling me about him being an artist. I mean, even look at Nipsey, how all Nipsey wanted to do was become an artist, but got onto the business side because it paid.
I mean, even if you look at it, the artists really, even since like I know I'm probably one of the older gentlemen on the panel, so even 20 years ago, when we were in our early 20s, we would see artists, and yeah, they would be with the record label, but the producer or the person who made the beats and was behind the scene or the engineer made all the real money.
Exactly. Yep. Made money on all the spins, made money on the hits. That's like, I know a lady a girl I went to school with, her her boyfriend made like two hit songs for Lil Wayne, and set him over the top. And he's still getting that check coming in.
And that's something that's also interesting, like business, like the way that they do business in the music industry, that is like very lucrative for it's usually like not everyone's making money out of it, but there's probably a big risk. But um I noticed that there's a lot of people, like you guys were saying, behind the scenes. That's where the money, the actual money, is being made. Like with Little Yachty, no, it wasn't Lil Yachty. It was that guy out of Chicago. He passed away.
FBG
Juice
Duck or
WRLD.
Kendrick?
No, Juice WRLD. He made a song, but he sampled an artist, like a very famous, like old rock star or something. And Phil Collins, he sampled Phil Collins. So his song was like the biggest song in the country, but Phil Collins got 90% of the money from it because he didn't clear it with him. So like music law and entertainment law is like your
It's
intellectual
tricky.
property. Mm-hmm.
It's tricky because when it comes to situations like that, you know, the arbitrator can be based off of whoever that controls who controls the ownership. So that's why segments like that, people should always have a good lawyer. Like Master P went to Michael Jackson's lawyer in order to be able to understand how to be able to get a strong 80-20 distribution deal, which, you know, people now fathom about now, where you can keep 80 and the only thing you have to do is pay for your marketing and you just send them 20% for the distribution. You know, situations like that
Yeah, because
definitely
take for
makes,
instance.
because he for one thing, y'all remembered it more than I can tell it. Y'all actually remembered how all the No Limit albums was being rolled out like
Every
12
week,
every
dude.
fucking week.
Every week they dropped the album. Like it was
Exactly.
like I literally was buying albums galore, man. Like
Mr.
especially when I had my
Servon.
summer jobs. Hey, Mr.
Yeah.
Servon, Canon Abel.
Okay, so I ain't the old head up here. You know what's funny though? Master P started an empire from life insurance proceeds from his grandfather.
Exactly, from his grandpa. That
Yep.
yep. And then
And that
the
was
crazy
only 10
part was,
grand.
yeah. And the crazy part was he was still running the store. I think his granddad had, because he was going to the vendors because he would always go to them. So even though his grandpa had passed, he still was going to the vendors, getting everything and just paying invoices to the extent in which the business was still going. And the more and more he learned about it, you know. And that's the thing, you know, a lot of kids don't want to follow in their parents or grandparents or whatever footsteps of the business. But I mean, look how he became a multi-millionaire off of that.
That's why it's
You know?
important to be business owners, because being a business owner makes it easier for your children to be a business owner. Being a worker makes it easier for your children to become, workers. And so just being exposed to business minded people, that pushed him in the direction of becoming a millionaire or a billionaire. I'm not sure which one he is, but he also did things that were kind of out of the box. Like he did the movies. Now I've never seen them. I saw one of his movies. It wasn't too bad.
I got the hook up.
No, I
Molly,
saw
you hear me?
Lockdown.
Oh, okay, yeah.
That was
Because
good.
he had Repo. That was the later ones with
Yeah.
that was with Cat Williams, but he managed to sell a lot of tapes though.
From his car, right? He was selling it like
Yeah,
But
he
that
was
was
selling
the
it from
early
the
ones.
car.
The early ones.
Those
The
were the
early
starters
ones.
when he was selling it from his car. And then when he actually learned the game, got the money and learned the game. Because you got to understand, he created that buzz by selling from his car. That's the way Texas guys do it back. Like, okay, Slim Thug, this guy has multiple real
Well, he was
estate
in
investments.
Sugarland. Master P was in Sugarland, so
Yeah.
what's
He
Sugarland?
had,
Oh, Texas.
Sugarland, Texas. That's near Houston.
yeah, he had multiple real estate. Slim Thug got multiple real estate investments. But his thing was like in all the other Texas guys, they dealt with people from the city where they sold the tapes out the back of their trunk. They would go to DJ Screw, and what was the other guy out there besides DJ Screw? Because that he was with Swisher House. I think Big Mo or whomever that ran Swisher House. and that's who Slim Thug was with. So they would go to the tape shops, sell directly to the tape shops, and sell out the back of their trunks. And that's how they were, clearing the money out because the tape stores sold for $10. They were selling for, $10 out the trunk. Some of them would try to shortchange a little bit, sell for 8 or something. But if you want the hot stuff and it's hot, you're gonna pay 10, no matter if it's in the trunk, no matter if it's at a store, that's what's hot. And see, he took a 1 album deal with Star Trek, the Neptunes, just
Okay.
a 1 album deal just to get his name out there. And once he got his name buzzing, he didn't need them no more. All he had to do was just find a distribution company, distribute his music, because his name was no longer just in Texas. It was a buzz all over the United States, just off that 1 album deal. Boss Hog.
Interesting. Nipsey was selling his CDs like himself as well at first. But I think that sometimes that's what it takes, like that hustler spirit, and then being able to translate it into actual legitimate business.
I
Well,
think
word of
Soulja Boy
mouth.
had a great- Oh, go ahead.
Nah. Soulja Boy actually had one of the better plays that can still be used now.
Yeah. I think, and we call it misdirection, but it works.
Yeah, 'cause I remember that shit where you thought you was listening to Candy Shop, and it wound up being you.
Soulja Boy up in his
Yeah. And
Like-
he started all that just off of, making those videos on YouTube.
Them
And
damn ringtones too.
yeah,
damn
but
ringtone.
what's called signed him.
home rap.
What's the guy down here in Atlanta? He's a beat man. His son actually brought him to him because he started doing the Soulja Boy. I forgot it's a guy that not KC. It's a guy that makes beats down here in Atlanta. And he kept asking his son, like, what's this? And you keep doing all this jumping and like he's done, like that's the Soulja Boy. So he's like, who? Looked up, seen Soulja Boy dancing and stuff. That was when he was Tennessee at the time. And he took it. He's like, okay, well, let me see what this guy do. But you gotta understand, Soulja Boy actually changed the game. And one of my friends, he actually was talking about this. He went to get signed by Jermaine Dupri, and Jermaine Dupri actually signed him. He got into the album. He's about to get ready to produce the album. He actually with T.I. now, Rah. And the thing about it was, he didn't know how to make beats. He didn't do hooks. All he did was wrote lyrics. And when it came down to it, he wasn't an investment in the company. Same thing with Aftermath. One of my friends, he was getting signed to Aftermath. You know what Aftermath told him? Because he was into some guys with drug dealers and stuff. So he told him, he said, well, if you want to get signed to Aftermath, you got to pay us $100,000. And he was like, nah, that's not how that works. He said, no, that's how this works, because we're going to be investing so much money into you. Are you prepared to lose your own money to be hot? And he said, that was the thing. He didn't see deals like that being done, so he didn't take it. But he said now he wish he would have took it, because you got to understand, artists now, they're coming with knowing how to do hooks,
Market.
make beats, everything. So when it comes down to it, all the company has to do is just distribute your music.
Well, now that's what companies want. Companies won't even want to. Record labels or won't even deal with you unless you have like a blue check on Instagram.
Yeah, ain't no artist development. Ain't no artist development, man.
they're
You
not
gotta
doing
come ready.
Yeah, you got to come already hot.
Come with your
You
own
gotta
following.
come
You're
ready.
gonna have a bunch of viral stuff. And now, like what we're seeing with Davey, I found it interesting because I don't know if you guys noticed, he was at Rolling Loud, which was in Miami, and he made a controversial topic. You can agree with it, you can disagree with it, whatever. But I don't know if you guys are familiar with what he said. I'm not going to say it on this show, but
Please don't touch it very lightly, man. This
I won't.
this is supposed to get monetized, man.
No, I know, but what he did is he had to come back and apologize because all of those streams were he was getting taken off of festivals. He was getting taken off of different platforms, streaming platforms. So it's like, and that is what happens when you don't have a team behind you that can really like steer you away from the nonsense. Like scrub your Twitter. Don't say this, don't say that. Like, because making the money is more important. And he realized that because he came back and retracted his statement. But,
Publicist. Yep. They need a great publicist. I mean, that's why Bootsy, like, he make all his money on Instagram and all that. And when they took his account, look how he reacted. That they basically was taking food out of his mouth. You know, that's
and they didn't do that when he assaulted some people because he was getting in a lot of trouble. But that is not what mattered. What mattered is this recent thing, and he switched course quick. That's that's business.
yeah. You know, they cut
Man,
your legs back on Bundy.
That's definitely
Man.
business.
Man, who would have knew that Juvenile and Boosie would have been pushing the agenda? who would have do that? They would be the ones that push the agenda. Don't say the hot dog.
Oh no. Okay.
We're gonna refer it as the agenda. I don't mean to stutter, but I you know. Maurice, respect to you, man. Maurice, come up on the panel. You and your brother need to come up on the panel. Yeah, I usually come up around this time period. I need more people on the panel because we need to get to the real estate panel. We really need to transition to the real estate. To be honest.
Y'all were talking.
So,
y'all
like I mentioned
earlier, right?
Yes, we was. Actually, a lot of my stock plays did very good. We got good news. NSAV is already getting another partnership when it comes to another capital firm when it comes to a cryptocurrency exchange that's about to be launched on the 9th. Now, the Wall Street Journal has it at a price target of $22 a share. Right now, it's ranging around from 8 to 10 cents. When I told you guys, it was 0.004. So, yeah, Rishi, we covered stocks, but still, people need to pay attention to Net Savings Link, man. They're going to be the second publicly traded company that deals with cryptocurrency exchanges, second behind Coinbase. Robinhood actually had big gains today. I try to tell everybody Robinhood ain't going to be under $50 for no time soon, no longer.
Yeah, they're not going down.
People
man.
are buying
Even though that situation.
No, finish.
No, I was gonna say, even though that situation happened with them, you got to look at the fact of the matter is, I mean, this Robinhood is more or less for the low budget, people just starting off, just getting in the stock. So, I mean, what other company out here right now that's more accessible for just beginners like that than Robinhood? Even though they had their hiccup, now that they're offering like three times the stock if people join, and it was a crazy thing too. I seen guys that were buying stock. It was the guy he did a plug to where he would buy. He would get people to get free stocks, keep those free stocks for about a month, switch it over into the account. Yeah, so they were just making money that way. Like you get 10 people to get 10 stocks from Robinhood. Those 10 stocks, you send it to 10 people, they make an account, and there you go. You got $50 in there. Because most of the stocks average out at $5. And this guy, he was showing how he did it several times. He was broke. He just made people make accounts. Because all you have to do is just put your credit card on file. But the point of it is, once they got in it, they actually start buying stocks because they seen how easy it was. The average person don't even know like how easy it is to access stocks and buy, sell. It just not informed. That's the biggest thing with the community that we always have a lack of information and being informed.
Yeah, man, because people that's listening in, the Treasury bull is actually up. So TMF is up. So let me share my screen. Ticker TMF is up. So they short squeezed. So they short squeezed the Treasury bull. So let me share it. Hold on. Hold on. I got my. Matter of fact, I even got my stuff. Hold on. Let me pair it. TMF stock ticker. Okay. 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 Alrighty then. So let's share my screen. Get that done. Damn. As you can see the chart. Can you see the chart?
Yes, I was muted. I see it.
Are you guys the chart? All right. That's the 20-year. Actually, it's up today, and they short squeezed it today. That's the past 5 days. The 1 month, it still trends up green. Really, to be honest, people like to do call options and like to do bear put spreads on it so they can make money off of the dip with the bear put spread, doing a multi-day call option when it comes to buying that dip. They know that even if they sold at this midpoint here, where they can't necessarily time it, but they know it's still a downward trend off of them seeing it going down. This midpoint, people that shorted still made money, but people that have a call option trying to be able to get a vertical trend, you never get stuff like I never get at the extreme top, I never get it at extreme low. So when it comes to positioning and timing, you always try to look at the moving day averages like TMF. If anybody has their either their trading view, please type in trading view and they can be able to do the moving averages. They can be able to gauge it when it comes to this, but you can see the 6-month trend since stimulus has pretty much been deployed March, April, May. Now the Treasury is starting to get that upward trend from middle of May. So from May 12th to as we speak today. So Treasury bull definitely has that bullish trend. When it comes to 3x leverage, these are definitely something where you ride the rally. And it's always suggests that you always buy and sell and you rebalance every single day. You rebalance every single day to be able to protect yourself from any type of either decay when the market is either down or the expenses. But really, I invest in leverage ETFs. I like leverage ETFs because of the fact that I can amplify returns. But now I'm going to be looking and interested in insurance policies as well. So that's protection of capital. That's actually good for when it comes to hedge fund corporation type of strategies as well. Am I boring? Am I boring? Hello, I'm Morgan.
Are you? I didn't understand what you said. You said it was going a little distorted, but I saw what you were saying about the
Yeah, I'm
stock
Morgan.
market
Yeah, I'm
putting up.
Morgan. Yeah, I'm Morgan. Yeah, I'm Morgan.
No,
Let
you're
me
not. No one
refresh.
said that. I saw what you said.
Oh,
You were showing us that
okay.
it was 6 months, trending upwards.
Because so at the end of the day,
Finances are
3x
boring.
leverage is just something.
It's gonna be a boring
3x
subject, but
leverage is
you have to learn it.
3x leverage is something that always must be rebalanced. Always must be rebalanced.
Can
Only
you
time
show?
I would even really, huh?
Can you show the graphic? It's easier for me to understand it when you show the graphic. But go
Well,
on. I'm sorry.
my StreamYard is very lagging. So having all this energy being sucked up very quickly leads to a lot of lag when it comes to my screen share. Because literally when I screen shared it, it literally took about 2 minutes to even look at what I'm trying to even how can I say what I'm trying to make sure I can convey to everybody on what I'm talking about when it comes to strategy. Because literally the treasury bonds is something that's an economic indicator. That's something that everybody, that's economic advisors, strategic investors, when it comes to at least betting against the market, hedging. But all this is done by credit default swaps. So all this is done by the futures markets, options, bear puts. Actually, bear puts actually puts a cap limit when it comes to situations, so things don't go completely out of hand if the stock does go up when you're shorting a stock. Because when you short a stock, you're betting against it. So if it goes up, you're pretty much losing. Because you try to always make sure everything is evenly spread. That's why you invest in both sides of the bull and the bear to be properly hedged. So if this market tanks, like literally tanks 800 900 points consecutive days, you actually got money on your bear position that you can be able to sell your bull position to turn over to keep riding that wave if it's going to be a multi-day type of bear market, well, multi-week type bear market. But the Chinese bear position made a lot of good decisions when it comes to putting aside $50 every 2 weeks when it came to Yang. That's YANG. And that's because of the Chinese crackdown markets. Literally, they're cracking down on all the markets. They have a situation where they want all their Chinese companies that are on the New York Stock Exchange to leave, and that has caused a huge sell-off. Plus, you got billionaires like Kathy Wood, CEO of the ARK Invest Technologies ETF, well, Technologies Inc., but their ETF was one of the biggest winners in 2020. They actually got people 186% return on their investment
You were telling
year
me
over
about the stock yesterday. Um,
year.
um, that was interesting. I don't know if that's the stock that you were. It's P200, I believe. I forget the. I have it in my
You got to
head.
get the ticketer right. You got to get the ticketer right because you don't want to miss out on
I don't want
something
to.
you not
Yeah.
being sure.
You want to.
Because
You want
if
to
you
show
miss
us that one that you were.
INCC. So I will show INCC. Okay. Okay. INCC. Now INCC is actually about their opportunity. Because in the past whole month, this thing has been running nonstop crazy. And it's off of a merger situation. So it's International Consolidated Companies Inc. That's the name of the company. Buy the dip. Still buy the dip. But it trends up. Can you hear me?
Sorry, guys. I had
Hold
to
on,
step
Joe.
off for a phone call. I'll be right back.
All right, no problem.
But they just
Hello,
signed. They
boy, can you
signed
hear
the deal. Yeah, they signed the deal that. Did you? Was that the company that signed the deal with the government?
Yes.
So it's gonna be trending up.
Yes. So they got government situations and they got mergers. That's the only thing people should really study on when it comes to doing their own independent research, even beyond me, is always look for government contracted stocks. Because I don't want to make everybody act like I'm the authority when it comes to situations, but so far I've been right when it comes to suggesting where people don't even have to book a consultation or don't even have to even donate. People still manage to get good plays when it comes to TXTM. So that'll be the next stock that I'm going to tell you guys about. TXTM. TXTM blew up 62% today. So I told you guys about this the last previous live stream from yesterday. So can you guys hear me?
Yes.
Okay, I gotta make sure. I don't want to be bored.
I just mute so I don't have the background noise in your stream.
Okay, no problem. Okay. So that's ticker TXTM up 62% today. I told you guys about this on 11-hour situation. I told you guys about this on the Chinese situation when I told you about the Chinese crackdown. See, look at that beautiful chart. A smooth sailing up. A smooth sailing up. A roller coaster up. Charles Schwab, everybody. Charles Schwab. E-Trade. Charles Schwab, E-Trade. Do ticket tape trading, meaning that you track down this ticker forever. You track this one down, but the past 5 days still trending. Past 1 month, vertical leap. I told you guys about this for the past 3 or 4 episodes. So this is ranging around weeks. And it still hasn't went up 1 cent. It's been high as 1 cent. And that was in February. If this goes up 4 cents for me, that's 4x. That's 4x on my money. So I build my position up. That's what you do. When it comes to scenario like that, I told you guys about TXTM. I'm feeling proud of the fact that these stock companies are starting to put more effort in being transparent and actually getting its funding, actually being more transparent when it comes to its operations, and actually being more a stable. Damn, that glitched on me. Being a more stable foundation of what a company needs to do when it comes to filing forms, having a CEO that doesn't lie to you, a CEO that actually can back up the meetings that he's supposed to be having. So people should always be into the foundation of keeping a good solid word when it comes to everybody that they have either a situation where that you can email a good CEO that's transparent, is a CEO that you can find his stuff on LinkedIn and email him about the company information, and also to be able to figure out what is its future plans. So you got to always keep a solid understanding of, one, the CEO's information, two, CEO assistant, CTO, or CEO, because these people are very, how can I say that? They're very verbal when it comes to their conversations online and also on social media platforms. So we got a lot of good plays in today.
Yeah, I
We got
really
a lot of good plays.
Sorry about that. I'm enjoying the conversation and learning a lot. And I'm definitely going to be connecting with all of you guys going forward and paying attention to these stocks, because I think the market is going to be shifting really, really soon. And this is coming from a person who doesn't know much about stocks, but I know that back a few years ago when the real estate market crashed, like a bunch of years ago, it either made or broke people. And now we're kind of setting things up, because I see that I was just hearing something about the moratorium ending on evictions. So I think that's going to shift things. And
but that's based on states. Like certain, like California, they extended it. When it comes to the state to September, they're going to probably kick the bucket down the road until either the time of 2022, before midterms come in, to try to do that budget reconciliation. But if they're going to do budget reconciliation, then they're probably going to have to run up a $3 trillion bill that a lot of Republicans and a lot of Democrats aren't necessarily for either.
well, Florida's not going to. Florida is, Florida. We're a whole different.
Florida is in a transition of get back to work. But to be honest, stimulus makes a very lazy economy where nobody doesn't want to get back and participate in operations that actually crank the market forward. There's certain industries that actually needs the labor force to come back in order to be full, because they can't fully automate a lot of things. They can automate a majority of things. Actually, how can I say? They can majority. When I mean majority, let me be correct. Besides, they can probably automate 40%, 30, 40%. Because even with me, when it comes to my e-commerce stores, I have automated tools. I can automate my social media, SMS bump, meaning that I can get all the phone numbers collected, segmented in a file. I can be able to use Social Snowball. I'm saying it slowly so you guys can be able to write this down as well. Social Snowball when it comes to automated affiliate marketing. And I also use a method called retargeting, where I'm retargeting everything based off of somebody clicked on my page, or somebody clicked on your video, or somebody clicked on your ad, YouTube ad, Instagram ad, any ad. You can be able to follow up with them automated, basically concurrently, up to 30 days or to 180 days. But certain processes like that, like social media people, you can automate the task, but you still need people to monitor it. Like I still have people that I hire to monitor every day-to-day basis type of scenario going on to the e-commerce store. So I can't allow certain things to be fully automated where nobody's not working. And the same thing when it comes to general brick and mortar businesses, service businesses, and also technical type of businesses where you got to be able to be a plumber, electrician, handyman people. You have to be able to make sure that that everybody is pretty much in full in full work spirit, a spirit of working, to be able to get out there and work. Because a lot of times digital businesses like what I do, and digital businesses like a lot of people that you see, like Earn Your Leisure, they're good podcasts when it comes comes to a lot of stocks, financial, real estate, anything, just general business in general, they pretty much have the aspect of where a lot of people is transitioning, where they're making their monies in the market and also getting involved in real estate where they're quitting their job. A lot of people is quitting the job based on the fact that they're making more money off of not just unemployment, they're making money in general off of their own business. That's what people always kept on saying when the start of the situation, when they first start giving out stimulus packages of people in the business. Well, that's true, but people need to work on their business acumen, because you can have your LLC, you can have your trademark, you can have your domain, you can have everything, but if you don't have the level of business acumen where your business IQ of you getting lending, you getting business credit, you getting people, access to people like I do, when it comes to my situation, when I want a big apartment building, I will work with my guy, Mark, specifically on negotiating a building. So Mark is a loan officer of 26 years, no, not 26 years. Well, since 1988, so it's probably more than 25 years. That's more than 25 years of experience of him being a loan officer, him getting deals. That's where I need to be able to step up my game to be able to get those buildings. So next time where I can be able to show you guys, this is my building that I own, and we're going to convert this either from a warehouse to a at least a 16 to 24 unit. I really want to do 40 units, but you can only do so much based off the warehouse and the lot. But still, I'm thinking more bigger. I'm thinking more strategic when it comes to what I do. A lot of my clients, we help them with their credit repair. We help them on getting funding, situating them when it comes to stocks. I'm being there. I'm literally there. They got my personal. Everybody has my direct line when it comes to everything. I just be able to have everybody that's still focused to just understand that if the economy does fall, you have the ability to have a war chest of insurance policies, like Alonzo said, income protection. Because people should not forget that term, income protection. That's literally an insurance policy on your money to make sure that the equities on your property is preserved and protected based off of the policy. But you also got to make sure that you start these things ahead of time, so the time horizon isn't as far away from when everything is materialized. Everything is pretty much on the go when it comes from getting a loan against your 401ks, your self-employed pensions, or any type of accounts that you do have. You need to always understand, get the assets very low based off of the stress, either the stress sellers or pretty much of people that need a timely close. So always being a person that understand hedging and understand what Lonzo pretty much was stating of getting certain type of policies ready, that just makes you into a better investor. That makes your business IQ to a level where anything that happens, it can happen, but your business is not going to be affected. Actually, you be more connected to the fast forward economy, because e-commerce and anything that's digital, YouTube as well, will be considered the fast forward economy. So the fast forward economy is based off of the aspect of everybody doing transactions digitally, people having more faith on Amazon, Walmart automation. Because I tell people, if you're going to make Shopify, you have to make sure your promotional offers is stronger than Amazon, meaning that it's 20%, 25%, 2-year warranty, 1-2-year warranties, the ability to follow up when it comes to emails, even with Social Snowball, that automated affiliate marketing situation. You can leverage one person into 2 people, into probably 3 people, if the product comes in a fashionable time, and you make sure that your quality control when it comes to your sourcing agent, and always figure out the testing method when it comes to the product. Always have a good test when it comes to sending something to your location, and to be able to see, is it a sturdy product or does it match the size? Because you always got to make sure sizing, especially when it comes to e-commerce, when it comes to clothing. But that's why a sourcing agent and also your own personal tailor that's in the United States, U.S. manufacturers, U.S. Sourcing agents and suppliers is definitely a priority, where you can work with them, where you just have it where you capture the payment from your store and forward the customer's address from the manufacturer to the customer's address, where you don't even have to be able to buy 5,000-6,000 orders up front. But that's where your sourcing agent, and you could get a sourcing agent from Upwork. You always got to screen your sourcing agent when it comes to interviews. That's why interviewing is definitely a priority, because the better your interviewing skills are, the more you can be able to have somebody to manage and teach to recruit other people for you and give you status reports, key performance indicators already set up when it comes to your performance, when it comes to e-commerce, because the e-commerce business is just an online merchant. That's literally the only thing it really is, online merchant. You'd be able to make sure everything is on a standard of you capturing leads, you following up with people, so you have to capture and recover. So you capture the emails to recover on any missed out sales that you could have got, but people still followed in and logged in with you. All you got to do is just do what they call lead nurturing, where you have emails, or if you're a sophisticated company, you have video training sent to emails. And scenarios like that, you can be able to really have things in a very dynamic situation, in which ClickFunnels is something that people use. Sam's Cart is something that people use when it comes to digital products, off the aspects of trainings and lead nurturing and ability to be able to lead warm, make the lead more warmer. So it's all sales and marketing. So really, sales and marketing should be people's top priority, based off of you can be more mindful of negotiating, because sales and marketing can be negotiated several ways, where you can have a non-exclusivity contract. So a non-exclusivity clause is where you can be able to work with third-party people outside of your corporate partnership or any type of partnership that protects you as well, off of a sheer understanding of how to be able to get everything settled. So this is what Steve Ballmer used when he had a partnership with IBM in 1988. So he was the understanding of business. Bill Gates didn't understand negotiating, and Paul Allen was just a person. Just only thing he knew how to build computers. But a non-exclusivity clause is something that's very important when it comes to your contract negotiating. No matter if you're a freelancer working with a corporation, or if you're a person that builds stuff to somebody that's either in the music industry. To be honest, a lot of these people should work on non-exclusivity contracts to beat out a no clause, a no compete clause, because the no compete pretty much makes you a subservient to them, but a non-exclusivity clause make you your own boss, your own contractor. Pretty much, you can work third party.
There were a couple companies that actually got in trouble. Well, not in trouble, but the employees pushed back on that. I forget which company specifically, but I think they're challenging the non-exclusivity. I mean, the exclusivity clauses.
Non-compete.
Non-compete.
You mean non-compete?
Sorry.
The non-compete give it an unfair advantage.
Right. It's kind of like trying to corner the market. Like, I know Jimmy John's and companies like that were getting pushed back for it. But that again depends on your state, unless they make a federal decision on it. But as long as it's in place, when I'm definitely gonna have something similar set up when I have my food truck, because
yeah. All aboard. You keep that. Keep that on the hush hush. But like I said, when it comes to a non-compete, that just helps make sure that uh, you're pretty much cornered to them and you're subservient to them, and that's not what you want to do. You make sure that you always have a clause of non-exclusivity and also retain all of your rights and your intellectual property, as this is just a partnership, collaborative partnership, not stake ownership. And if it's a partnership where it is the aspect of you doing business, it can be profit sharing, because there are partnerships where it is profit sharing, but it doesn't require any equity cut, any equity stake inside the company. Profit sharing can be pretty much done off of a negotiated contract of a promissory note, and also have things notarized and documented. So that's literally what you do, like everything organized.
Absolutely. Well, I'm gonna cut out because I have some other things I have to take care of. But I really appreciate you for inviting me, and I
No
learned a
problem.
lot. I want to be back next time so I can get some more of this good information.
No problem. No problem. Appreciate you all aboard.
Thank you.
All right. Bye-bye. Okay. Okay. So it's still an open panel. Still an open panel. Click on the link. Click on the link. Open panel. But yeah, non-exclusivity clause is just something that be able to make sure that you can be able to do what you need to do when it comes to doing business with multiple businesses, corporations, and different type of individuals without being restrained to one. That restricts a lot of that restricts multiple cash flows. You can expand cash flows with partnerships. So when it comes to that, they're pretty much restraining you as an in-house employee instead of a contractor, third party, because really third party contractor situation over the employee when it comes to your profits, because you don't want nobody taking of none of your profits. That's just in general, that's just business as an individualist. That's literally the aspect of doing business, of preserving your money. But I think people should always focus on just having good lawyer teams around you. Always either research when it comes to who is the best lawyers, figure out how much their fees are, and just try to always work your way up where high ticket sales, high ticket products can be a good method of leveraging to where you can be able to afford certain things, where you can be able to sell high ticket products and you can pay for high ticket things without no issue. So I just want people to always understand that when it comes to me, I always make sure that everybody on this channel has the ability to see a lot of plays before it materializes, man, because NSAV is going to be literally one of my stocks of the year, where I can be able to make sure everybody sold it from where it was low to being at the prices that it is now at 10 cents. Because literally this thing has been a home run of a play. Absolutely a credible situation of just finding information and just getting the word out there. So you always look for pink current mergers. I'm going to keep on preaching to this till my head turn blue, but net savings link is something that everybody on this channel needs to be familiar with. Because in 2012, it was $1.50. So, and that was when they was thinking about just having a bank. Now they convert the situation into a cryptocurrency exchange. Now they can be able to get the opportunities where people that either don't like Coinbase, which I don't. So I might do business directly with Net Savings Link when they fully launch their exchange on August 9th. That's a key catalyst. That is a very vital catalyst for everybody to research, understand, and be able to garner. But this is an open panel for all the people that's coming in. Please like the video. Please share. Please feel free to join in on the conversation. Feel free to join in the conversation. That is funny. I got my first like and like dislike in like months. I rarely get dislikes. That is funny. But for the people that's coming up on the panel, always have your questions ready. Always feel free. And like I said, when it comes to the credit funding, when it comes to real estate directly, Mark B. Anderson at Capital Cash. You can actually find him here on YouTube. And he actually will walk down when it comes to a lot of the plays of a lot of the negotiating that's needed when it comes to seller financing, owner financing, assumable loan, subject to. Always research on those situations. So always be very key of any LoopNet situations. Be very key to any, what else is there? People with the Craigslist, because if you're a buyer, if you're a seller, he's really buyer hungry. If he's selling it on Craigslist, if you check out the information, meaning that you get the address, you look at the property records to be able to make sure that this is actually him, or actually his company, his LLC, if he is doing it in a business. But you got to make sure that all the records is matched up when it comes to screening out a situation of finding, buying, or assigning a property, so you can be able to sign it to a developer or sign it to a fix and flipper, somebody on biggerpockets.com or connected investors. You can use the pen tool on PropStream. You can use pen tool on connected investors, PropStream, situations of scanning and screening. But I always think people should just focus on being a more wise investor when it comes to at least understanding the market specifically, because people think too much of a macro instead of looking more micro in certain type of markets, because there's certain markets that are booming off of new jobs coming in. Dallas and Austin is going to win off of Tesla's moving in and pretty much moving in very strongly. So that's literally micro. And even the macroeconomics when it comes to Texas is very strong compared to other states like California. So on this channel, we always just try to be able to see what is your interest, what could we see you do? What could you see yourself doing, to be honest? What can you see yourself doing? Because it's always about progression. It always is about reinvestment, of course, but definitely leveraging certain connections to make sure that you actually got a ability to actually have, how can I say, people that can provide services rendered, people that can be more transparent and walk through on certain situations where you can be able to pick up the phone and it will actually be able to answer with an actual answer and actually walk you down when it comes to finding that answer if the person don't know directly. Because, you always try to be able to see what is a solid understanding of one. How can we actually get you to a standard of having a quality status report? Status reports keep you on file either a week to week, month to month. A project manager, if you're a person that I'm not an organizer, I'm this person that's just getting in the business. Property management when it comes to real estate, of course, but a project manager when it comes to either e-commerce or general business, or somebody that can be able to capture your leads, organize your leads, segment them, to be able to see who is ready to buy, who is not ready to buy, who is the aspect of getting the actual job done in a timely, fashionable manner, where you can time manage it correctly, where you don't have any hiccups, bottlenecks, or any type of situation where you're constantly going back, getting held up, more time hold back. Because the time gets hold back, you have a lot of either people use a lot of debt when it comes to financing a business. People either use their hard-earned cash when it comes to the business, and they want a turnaround. They want a remuneration on their money. So they want to be able to make sure that everything is on the top, day-to-day sales, day-to-day operations moving smoothly, and PayPal will destroy a business. I'm gonna have to say that directly. PayPal can single-handedly destroy a business because of them either holding funds, either on suspicion, even though you've been doing business with them for years. They have a lot of switch up type of mentality when it comes to their doing business with people that's been on PayPal for years. So e-commerce businesses should always focus on either using Shopify payments to leverage the Shopify capital, cash advances, and flexible Shopify loans, or use Journey Business Solutions when it comes to the merchant cash advances that they provide. And they'll also do businesses when it comes to hair extension businesses, hair bundle businesses, because people need to take advantage of it regardless of any walks of life, male, female, regardless, take advantage of that. Those opportunities can be able to leverage a lot of healthy bank statement loans on the back end. A good bank statement loan, 6 to 10 months. That's why I have a lot of teams around me to be able to make sure that stuff gets done. I always make sure that there's a proper walk down when it comes to all the information that you receive. And for the people that are my detractors, I always make sure that people that are even skeptics can be able to make money. Because I got a good team with me. I got me, Brian, Mark Anderson, which people need to research. Mark Anderson, well, not any research, Capital Cash, Mark on YouTube. But he provides good services, extraordinary services. He can actually get you a situation where the only thing you need to do is just find a cooperative seller financing, assumable loan, and he can actually do good deals with you. So he provides a great, immaculate service that people should always be able to find. How can they be able to put themselves in a position where they can be able to find the leads either on LoopNet, on a CREXI, and be able to send them deals over, and you can be able to get paid every deal that you send over that successfully negotiated, the letter of intent, the pre-approval, and also the ability to get a solid age corporation. That's where Mark is the home run hitter when it comes to the situations of my team. So I love the situation that I have with everybody when it comes to this channel, this platform, all the people that's coming in. I respect everybody that's been here. And for all the people that is detractors, man, I just want everybody to just look at the old videos, look at all my calls, and look at the situation from the time period now, from then to now, to be able to see that the situations that I'm telling you about is something that I don't just say one time and just get rid of. It's something that I actually follow up every step of the way. But I'm Real Deal Financial. I'm your host. I appreciate everybody that's coming in. For the people that need my email, creditbuilder475@gmail.com, creditbuilder475@gmail.com. Appreciate everybody. Have a blessed, productive day.